We're very close to finalizing America's portion of this $50 billion loan package. We're making Russia bear the cost and the expense of the damage that it's inflicting on Ukraine.
We'll get the latest from the Biden administration up next.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Here's the state of play this morning, and good morning to you. Equity futures on the S&P 500 with a bit of a bounce following 3 days of very mild losses. On the S&P 500, we're up by 0.5%. Treasuries have been selling off. Yields have been climbing over the 3 previous days as well. Yields declining now by 5 or 6 basis points, 418.99. Under surveillance this morning, the G7 finalizing a $50 billion loan for Ukraine.
We're very close to finalizing America's portion of this $50 billion loan package. We're making Russia bear the cost and the expense of the damage that it's inflicting on Ukraine. We expect to be able to contribute $20 billion to the $50 billion G7 package.
Here's the latest. The G7 finalizing a $50 billion loan for Ukraine using the profits generated by frozen Russian central bank assets. Treasury Secretary Janet Yellen also announcing the U.S. will unveil strong new sanctions against Russia and nations supporting its war effort as early as next week. Joining us now around the table, the U.S. Deputy National Security Advisor for International Economics, Dilip Singh. Dilip, good morning.
Morning, Jonathan.
Credit where it's due. A lot of this work, you had a lot to do with it. Walk us through the objective of this plan, of this loan.
So remember the context. 2 days after Russia invaded Ukraine in 2022, the United States, the G7, we collectively froze Russia's central bank assets held in our countries, about $300 billion worth in total. By all accounts, this came as a surprise to Putin. The severity of the action, the speed, the unity of the G7. So 2 years later, 2+ years later, this June, as you showed on your screen, the G7 committed to lend $50 billion of that value of the Russian frozen assets to Ukraine, using the future interest flows to pay us back. So yesterday, President Biden said, we're going to make good on our commitment. We're going to lend $20 billion to Ukraine. The rest of the G7 will lend $30 billion. It's a big deal. Never before in history has a multilateral coalition frozen the assets of an aggressor country and then found a way to unfreeze those assets for the benefit of the aggrieved party. all while maintaining the rule of law and our solidarity. So that's where we are.
Dilip, are you concerned about the consequences, though, in the future? You have the BRICS right now meeting, talking about whether or not they should move away from doing transactions in the dollar because of things like this.
Well, the important aspect of this deal, I would say two aspects, actually. One is we followed the rule of law. In every single jurisdiction, we stuck to the letter of the law. Second, we maintained our unity, our solidarity. There have been some calls to seize the principle of these reserves. We have a legal pathway for doing so. Europe does not. We're going to keep working towards that. But at this stage, what we're doing is harnessing the interest flows that will accrue from these assets. And we're saying, let's transfer the value of those interest flows to Ukraine so it can fight for its existence.
I was at the G7, so were you, where this really got pushed over the finish line in terms of the Europeans saying, okay, we agree with you, we're going to come on board. How much does the U.S. presidential election, how much did the fact that in November, potentially there is going to be a change at the White House, impacted the Europeans wanting to get this done today?
Look, I would say part of the motivation for this G7 deal was to prove to Putin, no matter what happens in our election, time is not on his side. I can give you 300 billion reasons why time is not on Putin's side. It was also meant to demonstrate that multilateralism, it's a force multiplier in foreign policy, and that we're not out of options, we're not out of creativity. So all of those were, I would say, underlying motivations for how this deal came together.
Some people might suggest, though, that America is losing influence on the global stage. We haven't managed to persuade China to come to our side of thinking on several issues in international foreign relations right now. Is there any evidence that we've regained any kind of influence on the global stage at all under this administration?
Well, you mentioned China, John. I mean, I know there's been a lot of talk about protectionism at the IMF this week and beyond. I mean, my sense, my interpretation of what we're doing is that this is a very positive-sum view of the world, and we hope China and other countries come towards our way of thinking. What we've said is, look, we're going to invest in our productive capacity, number one. We're going to strengthen it and scale it up. Number two, for countries that are playing by the same rules, we're going to give access to our productive capacity and our purchasing power. We hope it's reciprocal. But third, and this is where China comes in, for countries that are not playing by the same rules, we are going to use restrictive measures like tariffs to level the playing field and to prevent hundreds of billions of dollars of American taxpayer money from getting undercut. That is not a defensive approach. That's not a protectionist approach. It's a positive-sum view of the world. We're trying to change the terms of the competition. You know, if the terms of the competition are your capacity to innovate, your ability to collaborate with a network of alliances and partners, your ability to attract ideas and talent and investment, that's a vision that every country can buy into, and I very much like our chances if that's where the competition goes, China included.
To Anne-Marie's point, there are some countries, some economies, some groups of countries starting to think about trying to move away from the US dollar. Mohammed Al-Arian wrote in the Financial Times earlier this week, you might have seen the column that he produced, said a loss of confidence in America's management of the global order may have contributed to this run-up that we're seeing in the gold price. Do you see any evidence of that? A breakdown of confidence in America's ability to manage the global order?
Look, I don't think we're going to see, if there was a breakdown, we wouldn't see it in the data. By the time it showed up in the data, it would be too late. What matters is whether we continue to be who we are, whether we continue to have the rule of law, independent and credible institutions, fair and effective regulations, trust in our stewardship of the global economy. That's what gave us dollar primacy in the first place. If we continue to invest in those competitive strengths, we'll be just fine.
Dilip, gold is just one example, though. What do you say to those that say sanctions don't work, they just create new markets?
What I say is, what is your alternative? We're in an environment of very intense geopolitical competition. Both Russia and China have expressed and revealed a desire to disrupt the US-led order. When there's conflict, we tend to have three options. Do nothing and stand aside and watch international rules that underpin peace and security get flouted, or go to war.
But if that's
Sanctions
the feeling,
fill the policy space in between.
Why do a price cap? Putin makes money every single day exporting oil and gas. Why not just sanction it? That's how he funds this war.
Well, sanctions work if they're sustainable, and they're only sustainable if they hurt our target more than they hurt ourselves and the global economy. So take energy, for example. Coming into the war, Russia was the third largest supplier of oil and gas to the world when global supplies were quite tight. We cut off Russian energy within a month of the invasion, so did other G7 countries. But the idea of cutting Russian energy off from the world, that would have felt good. Believe me, it would have felt good. But it would have meant a global shock to global energy and food prices. It would have harmed millions of innocent people at home and abroad. it would have flattered Putin's energy export revenues. That's a self-defeating strategy. So we took a much less sexy, less shock and awe approach, much more nuanced, harder to explain. But the global price of oil is down a third since the invasion. His revenues are down by a third. The global energy market's coming into balance. We're moving away from Russian fossil fuels. We're going to have a chance to hit him harder. The time is coming.
So, chance to hit him harder, how?
I'm not gonna telegraph that here, but rest assured we have options, and it's a matter of time.
Let's go back to this idea of Jonathan brought up with China and tariffs. China's a big player when it comes to what they're doing in Russia. Russia's able to get chips, say, from refrigerators and maybe use it in their military base. When it comes to tariffs, you're talking about the fact that you think they need to be used on places like China. What do you think separates the Democratic position than what the former president is saying on the campaign trail?
So I'm just going to speak hypothetically, since I'm not on the campaign. Across the board, indiscriminate tariffs, they are going to have 4 predictable consequences. Number 1, global retaliation. Number 2, it's a regressive tax on the most vulnerable segments of society. Number 3, it compresses profit margins for any business that imports components. And number 4, would isolate America on the world stage. It would alienate our allies and play right into Putin's and Xi's hands. Our approach has been, there's a role for targeted tariffs, but tariffs alone are not a path to prosperity. So we have taken an approach which says, number 1, we're going to invest in our productive capacity, as I mentioned earlier. 2, give access to our productive capacity if you're playing by the same rules, but we will use tariffs if they're necessary to rebuild our industrial base, especially in strategic sectors. We put tariffs on $18 billion of Chinese products over our term. The previous administration put them on hundreds of billions of products in an indiscriminate fashion, and now we're hearing about proposals for an order of magnitude greater increase in tariffs. That's not where we are.
And then it wouldn't shock me if in 4 years' time, the Democrats, if they fall out of power, get back into power and keep them. This is what's confused us all. There were complaints after complaints about what Donald Trump were doing, and then all of a sudden, they were kept. And not only that, there was a rebrand. And we talked about the rebrand on this program. I often hear Democrats call it a tax. And then we hear really sophisticated things about what the Democrats have done themselves. And they say things like, well, no, this is about protecting national security. These are national security objectives. Is that a distinction without a difference?
No, it's an important distinction because whether it's tariffs or export controls or sanctions, we need to have a limiting principle. We need to have a strategic anchor. So for tariffs or export controls, for example, if we can identify a strategic objective, whether supply chain resilience, technological preeminence, energy security, and if we're competing with a trading partner that's playing by a very different set of rules, and if that competition threatens to undercut the investments we're making, then there is a role to level the playing field, and tariffs and export controls can play that role. But we have to be really clear with ourselves and the public and our counterparts, including in China, why we're putting on these tariffs rather than slap them on indiscriminately. That's the difference.
Dilip, I could talk to you all day. It's good to catch up. It's good to see you.
My
Thank
pleasure.
you, sir. Thank you very much. Dilip Singh there, the Deputy National Security Advisor for International Economics. Coming up on the program, Dana Peterson of the Conference Board survey showing fading optimism among corporate CEOs in America. Equity futures on the S&P 500 right now up by 0.5%. In the bond market, yields are lower by 5 basis points. Your 10-year 4.19. The 2-year down 3 to just north of 4%. And the euro looking at 107.95 on euro dollar. From New York, this is Bloomberg.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Let's get a check of equity futures for you on the S&P 500. We are near session highs, up by 0.5%. On the Nasdaq 100, up by 0.9. This is a nice bounce, encouraged by Tesla. Let's get you some morning movers. Let's do that with Manus Cranny. Good morning, Manus.
Jonathan, a very good morning to you. The gap between promises and delivery from Elon Musk at Tesla is closing. Cybertruck makes a profit for the first time. Promises of deliveries next year up 20 to 30%. This is a pre-session high for the stock. It was a blowout quarter in terms of the actual volumes that have been promised. China is on the rise, but it's the margins. Take out the credits, and the margins were 17.1%, way ahead of what RBC were expecting at 13.5%. And this is what causes RBC. We caught up with Tom Narayan this morning. He's upgraded the stock to $249 with an outperform on the price tag. So there's a real musculature to that. It's a blowout quarter on margins and promises. Will they deliver a cheaper car next year? Maybe they don't want to announce that just yet. Boeing is on the downside. The machine workers say no. They say no to a 35% pay increase because they want to hold out on their pension funds. This is the real stumbling block. Now, again, we talk about gaps. 94% rejected the previous offer. The rejection number comes in at 64%. But this is about dealing with some of the unvarnished truths for Kelly Ortberg, which is a very defensive set of union and losses of over $6 billion. Wells Fargo remain underweight on the stock and an $86 ticket on it. IBM, this is fascinating. Software consulting sales. This is the difference. Solid quarter, but uneven. You've got a cannibalization. Generative AI projects, $3 billion in revenue. That's up by $1 billion. But those projects are coming on board at the expense of the traditional consulting business. Gen AI, cannibalization, wrote large at IBM.
Manus Cranny, thank you, sir. I'm assuming you're finished. Manus, appreciate it, as always. Thank you, buddy. Thank you very much. Let's get back to the bond market. 10-year yields down by 5 or 6 basis points. On a 10-year, 4.19. We're down about 4 on a 2-year to just north of 4%. Nice little bounce in the equity market following 3 days of losses on the S&P 500. Equity futures on the Nasdaq up by close to 0.9%. Under surveillance this morning, Boeing factory workers rejecting a new labor contract offering to raise wages by 35% over 4 years. 64% of union members casting ballots voted against the deal, with pensions remaining a key sticking point. Stock is down 3.8%. Have to note the surprise that I've seen from the analyst community who thought that we'd get a deal yesterday afternoon.
Well, we heard from George yesterday of our own Bloomberg Industries saying, yes, I think this gets it done because they did come in with higher wages. You're getting a $7,000 signing bonus. But the only silver lining I could see right now is that in September, the vote for no was an overwhelmingly 94% of workers. Now it's 64%. They need to get to that 50%. But what gets it done? Does Boeing go to 40%? That's what they're asking for.
Stock is down by close to 4% in the pre-market. Elsewhere, positive signs in the airline industry. Southwest reporting third quarter profits that nearly doubled estimates on Wall Street. American Airlines delivering a beat and a raise with a stronger balance sheet. Investors hoping American is winning back lucrative corporate businesses. That stock is still lower. We're down by 3.6%. Southwest is up by 1.5.
So what it looks like is, at least for American Airlines, they had a really rough summer turnaround from July. That's what they're seeing right now. And then in Southwest, they have this huge fight with activist Elliott Investment. Maybe they're putting that behind them. That comes to an end. So the trajectory looks like potentially it's only going up.
You can talk about industry and then execution. Execution, American Airlines, you speak to the analyst. American Airlines, the execution has just been awful over the last few years, and they're still trying to climb out of that hole.
Still trying to climb out of that hole. What more can they do? It's a good point you make. Do you see the actual money being spent? They want to climb in to have better terms of business sales, business class, first class. Do you actually see them doing that? No, not really. This is a problem.
That stock is down in the pre-market. Let's see if that move sticks. Here's the latest on the election campaign trail. The DOJ warning Elon Musk's Political Action Committee that his offer of $1 million to registered voters may violate federal law, as he plans to do it every day until Election Day. Sources telling us here at Bloomberg, the DOJ's public integrity section sent the warning.
So now Musk knows that potentially he has this warning. This might be illegal. You might be in violation of federal law. I'm interested to see how he changes his tune then the next few days, if he goes out on the campaign trail with the former president, and does he start talking about this $1 million check? More interesting, I think, to our viewers especially. Yesterday, he was asked about this outsized role he really has in the Trump campaign and this idea, and he talks about the Department of Government Efficiency that he would like to oversee. And it sounds like one of the first items of business he wants is a national pathway to approve autonomous vehicles, as opposed to all this regulatory patchwork work that Tesla needs to do. So he wants to be in control of a government agency that would directly benefit his company.
I'm going to raise you something far more interesting than that. If I receive a $1 million check in this effort and then they say it violates law, do I have to give the money back? Or can I go out and spend it?
That's a good question.
That's the most interesting thing to me. If I've got one of those checks and I cash that thing,
I guess my advice would be to those individuals is go cash it now.
and go spend it quickly. That's the latest on the election campaign trail. Let's turn to the C-suite and attitudes of US American CEOs. The Conference Board's measure of CEO confidence showing sentiment falling for the second straight quarter. The chief economist, Dana Peterson, saying this: CEO optimism continued to fade in the fourth quarter as leaders of large firms expressed lower confidence in the outlook for their own industries. Dana joins us now to more. Dana, always great to catch up with you. Let's just get to this survey. What stood out for you? What underpins that lack of confidence or that fall in confidence going into year end?
Well, I think a lot of it's election uncertainty. And certainly when we ask CEOs, what are you very worried about? Their top three things are cyber, regulation, and geopolitics. So putting all those things together, there's a lot to wonder about for companies. They're also concerned, I think, about what the tax and tariff environment is going to look like for next year. So putting all those things together, as well as a lot of uncertainty for certain industries, I think companies are just a little less optimistic than they were a few quarters ago.
Shouldn't this be a moment, though, for business that they should feel certain about the election? Not who wins, but they know what's coming at them, depending on who wins. We basically have a race of two incumbents.
Yes, but the policies are very different around key issues, especially things that directly impact businesses. For example, is there going to be a change in the corporate tax rate? Are we going to see more or less tariffs? Are we going to see more or less regulation? All those things matter. And certainly for companies that are B2C, they're wondering if their consumers are going to see a big tax hike starting at the end of next year, which will impact consumption and certainly their bottom line. So there are a lot of things that are just not clear, and we won't know until the results are in.
What sectors are you seeing this hit the hardest? What sectors are the most anxious about November 5th?
Well, in general, when we talk to our members, it's not necessarily in the server, but when we talk to our members, those who are, again, B2C, very concerned about what the tax environment is going to look like for consumers. Are consumers going to eventually run out of spending power? It doesn't seem like it so far, but will that happen? Will the labor market hold up? There are all these different questions that businesses just don't have answers to. But I will tell you that a number of our businesses are actually pretty optimistic. They're the ones that are benefiting certainly from the industrial policies around infrastructure, manufacturing, building, reshoring, chips, all those things, from whether you make those things or you provide the inputs for them. They're optimistic. But of course, they're still concerned about, well, what does the environment look like? Will some of these pieces of legislation that help them be eroded, done away with, or maybe there will be more industrial policies. We just don't know.
So following the election, we get some clarity. What do businesses do next then? Is it going to be a hiring spree? Is it going to be capital spending?
Well, when we ask businesses about what they're going to do with their payrolls, it's still the case that roughly 40% are anticipating that they are going to just sit tight. They're not going to hire, they're not going to fire. Just under 40% say they will continue to hire. Those are probably the companies that are still experiencing labor shortages, especially for those jobs where you physically have to show up for work. But we did see a little bit of an upcreep in the percentage who are saying they might let people go. It's now at around 25%. But that means 75% of companies are still not planning to do anything detrimental in terms of letting people go. So it's something that we definitely have to watch. In terms of investments, they're still saying that whatever our plans are right now, we're going to follow through with that. So it's a little unclear. So if they were planning on investing more, then they're going to do it. If they were going to invest less, they'll do that, or just sit tight, they're going to do that. So there's still a lot of uncertainty. And when we look at the GDP data, it's showing that companies really aren't spending on much anything else apart from IP. And I think they really want to see the outcome of the election, certainly at the presidential level, but also the composition of Congress, because that will determine what legislation is passed or changed.
Dana, later on this morning, we'll get some economic data. We'd love to finish up with your thoughts on that. We'll get jobless claims, and then November 1, we get the October jobs report. How useless will this economic data be, given the hurricane impact of the last few weeks?
Well, we know that jobless claims did pick up a little bit a couple of weeks ago, and that was very clearly the effect of the first hurricane that hit the southeast. If you looked at the data, you could see Florida, Tennessee, Georgia, they all had very elevated claims. And then 2 weeks later, we had the second hurricane. So we're probably going to see an uptick in jobless claims today because of that. But of course, you can look at the detail to see which states were impacted, and really away from Michigan, which I think is impacted certainly by strikes and things like that. We're not really seeing much of an uptick in claims. Now, for payrolls, you probably will see a significant impact from the hurricanes, but the Fed's just going to, and markets should also just look through that and see what's going on apart from those areas or industries that we know were definitely impacted by the hurricane. And the key thing is to look at hours and wages. The consumers are still seeing, workers are still seeing their wages rise, and the unemployment rate doesn't tick up much. And if it does, it's all like pretty much temporarily associated with the hurricanes, and I don't think we should worry.
Dana, appreciate it. As always, thanks for catching up with us. Dana Peterson there at the conference board. Speaking of that word worry, you see a bit of anxiety. You see it in the labour market data. You can see it in the conference board data as well, and you can see it in that survey they've done of CEOs.
Absolutely, and the idea is that CEOs, they just want clarity. They need to know what the regulation environment's going to be. They need to know what the corporate tax rate is going to be. And before they start capital spending, hiring, they want some clarity on what it comes out of Washington, D.C. But also, as she's talking about that labor report, I'm reading this Citi released report from Andrew Hollenhorst. Notable drag from recent strikes and hurricanes. Markets may be inclined to look through a weaker reading. How many people are going to say, ignore it, look through it?
Bond yields down this morning, down 3 basis points on a 2-year. Equities higher, up by 0.5 with an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. China is pressuring its automakers to pause expansion in the EU because of escalating EV trade tensions. Earlier this month, the EU voted to increase tariffs on electric cars made in China. State-owned Dongfeng has already reversed plans to make cars in Italy following Beijing's request. Hermes remains resilient in a global luxury slowdown. Sales increased just over 11% in its latest report. That was ahead of analyst estimates. Sales in Europe, Japan, and the Americas all exceeded estimates in the quarter. Sales in China, meanwhile, fell slightly below expectations. The resilience is led by strong demand for its pricey handbags like the Birkin. Less than 2 weeks until Election Day, and the candidates are in a locked dead heat. A new Bloomberg News Morning Consult poll shows Donald Trump and Kamala Harris statistically tied among likely voters in each of the 7 swing states, with 49% for each among likely voters. In the final push, Trump's campaign is aiming to mobilize voters who haven't typically turned out. Harris, meanwhile, is looking to fire up women and pick off moderate Republicans who aren't Trump devotees. And that's your brief, John.
Danny, thanks for that. More from Danny in about 30 minutes. What's your take from our latest poll?
The take is that I think Trump has a slight momentum the final month of this poll. poll because in September, Harris was actually up slightly. Still, all of this was in the margin of error, but you see a slight momentum to him. And then obviously, 12 months, we've done this poll for an entire year. The economy, #1 issue, and it benefits him.
Away from the national polling and a swing state polling, what do you see in Senate races? Same thing, just some momentum going towards Republicans?
Well, look at two key ones that were lean Democrat have now moved to toss-up. Cook Political Report puts Wisconsin as a toss-up. That's Tammy Baldwin's seats, and then puts Bob Casey's seats in Pennsylvania also as a toss-up. People are actually talking about maybe Mr. McCormick of Bridgewater coming into the U.S. Senate.
Speaks to some of the market moves we're seeing over the last few days, the last few weeks. Up next on the program, the campaign trail gets ugly.
Let me ask you tonight, do you think Donald Trump is a fascist?
Yes, I do. Yes, I do.
After all the catastrophes she has caused, Kamala Harris can't say one thing that you do differently.
Former House Speaker Kevin McCarthy, up next.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equity futures on the S&P 500 up by 0.5%. We've got a bounce in this equity market. In the bond market, a bounce too. Yields are lower. We're down 5 basis points, 4.1938 on a 10-year. Under surveillance this morning, the campaign trail gets ugly.
Let me ask you tonight, do you think Donald Trump is a fascist?
Yes, I do. Yes, I do. And I also believe that the people who know him best on this subject should be trusted.
After all the catastrophes she has caused, Kamala Harris can't say one thing that you do differently. You saw that? What would you do differently? I can't think of anything.
Here's the latest this morning. Kamala Harris and Donald Trump attempting to paint stark contrast in a race that is still anyone's to win. A new Bloomberg Morning Consult poll showing the candidates tied among likely voters in all 7 battleground states. Joining us now, former Speaker of the House, Kevin McCarthy. Speaker McCarthy, good to see you.
Good to be here.
It's a tight one. And if I could offer you the outcome of any one race right now, which one would you want to know?
I would watch Pennsylvania.
Why is that?
Because we elect presidents not by popular vote, by electoral college. So you assume if you look at the last election, which was only won by 48,918 votes, that Donald Trump would get pretty much the same electoral states that he got before, and I believe he'd pick up Georgia. If he picks up Pennsylvania, it's over. He's gotten to his 270. He wouldn't need Arizona, he wouldn't need Nevada. And when you look at where the play is, even the union voters in Pennsylvania overwhelmingly support Trump over Kamala. And Kamala, at the end of the day, if she loses this race, it's going to be her listening to Pelosi when Pelosi pushed her to pick Waltz, not because Shapiro's too ambitious. I like leaders who want people who are ambitious around them, not people who say, I won't compete.
He's beloved in Pennsylvania, and he's out there still campaigning for whether or not he's on the ticket or not. Do you think in Pennsylvania they would reject the Democratic Party, even though they love their Democrat governor?
They're not rejecting the Democratic Party. They're tired of high inflation prices. They're tired of the border being wide open. They want someone to do something that they'll actually say. You know, you watch President Trump go into a Steeler game and people start chanting USA. What do you think they would chant if Kamala was sitting there? They probably wouldn't say anything. And listen, if I asked you or America, tell me the 3 things Kamala Harris will do if she gets elected president. She has spent $1 billion. The only thing I know is she's going to give people $25,000 for the first house and bring inflation to home prices. That's the only thing I know.
Are you expecting a Republican sweep?
No, look, it's going to be a very tight race. Republicans will win the Senate. We're in a good place, and that's purely map. The presidency, I give a 60% chance that President Trump's going to win there. I just watch. It's a tight race. In the House, it's actually easier for Republicans to win seats this cycle, but Republicans now are behind on money. I just came back and saw 4 races that were tied that Democrats had, but they don't have the money to go play. They've made a mistake in this process. We always had more. I don't see the strategy in the House where you're on offense. I would go out. We beat the DCCC chair last time. Remember, the last 2 cycles leaders, I only won. When Biden won the presidency, it was the first time since 1994 no Republican incumbent lost.
But, Speaker, the Republicans were feeling really good this time 2 years ago. Remember, Kerry Lake was supposed to be the governor of Arizona? It wasn't the red wave.
No, but there was one place that still won while everybody else lost. Same thing as the election before, in the House. And we elected the most Republican women, most Republican minorities. We won 5 seats in California, 5 in New York. We won Oregon, we won Arizona. We won where Republicans were losing. And if they keep, the problem is they're not keeping with that same strategy. President Trump, though, this is the thing you want to look at it, who's going to win, okay? First of all, the campaigns in Wisconsin and Pennsylvania, the incumbent Democrat senators are using Trump in their campaigns, not against him, but hugging him. So tell me how that's going to turn out. That's a good sign for Republicans. Then you're looking at articles where there's infighting in the Democratic Party because they want to know who to blame when they lose. And now they're literally talking about, would it have been better to keep Biden on the ticket? And now you have people really going after Pelosi because not only did she and Obama push Biden off, she's the one who selected the VP candidate that put him in this problem.
You're very well versed in the House races.
You want to walk through them?
Well, no, not all of them. There's too many, but
no, there's some key ones you should walk.
You were a prolific fundraiser. You saying they don't have money now. Whose fault is that? Is that Speaker Johnson's problem?
No, look, he just came in. No, look, I wouldn't put that on Johnson. I'd put that on the 8 who partnered with all the Democrats. Who are helping. Why would the Democrats partner with these 8 Republicans? Because they knew it would give them an advantage in an election. That they couldn't. Just our super PAC last cycle had more money than the DCCC and their super PAC. Now, if you want to look at the makeup of the environment, and this is where you want to see, timing is everything in politics. Gallup does an interesting poll where they don't ask you if you'll vote for Harris or Trump. They ask you which party do you identify with. and they've done this for decades. Republicans are leading 48 to 45. Now, is that important? Yes. Republicans have never led. And they ask a second question. Who's best to solve the problems? Republican leading that. So it's a good environment. In the House, North Carolina redistrict, so you automatically start with 3 new seats you can pick up. You've got a race in Colorado that last time was a new seat that we had a libertarian in that picked up 4% of the vote. They're not in. Gabe Evans could pick up there. Alaska, a ranked system. We don't have the second Republican running there. We'll pick that seat up. Then if you go to Pennsylvania, we had a bad top of the ticket last time for governor. Dave McCormick is fantastic. Donald Trump is fantastic. So 1 or 2 seats there. You got Michigan, where you have Slotkin, who pulled out. Tom Barrett's running.
You're feeling like Republicans were talking 2 years ago. We only have a little bit of time left. I have to ask about Elon Musk.
No, I'm telling you there's opportunities if you have the resources.
You see the opportunities if there was resources, maybe if
every cycle I was leader, we gained seats in California. There's 2 other seats we can gain. The question is, are you putting the resources in to get the message out to gain it? The environment is there. If you don't turn it out, there's a problem.
Let's talk about man with resources, Elon Musk. He's saying that if you are a registered voter, you can get $1 million. There's some legal issues with that, but that's not what I want to ask you. I want to ask you about this idea that he can become the head of the Department of Government Efficiency. Does that make sense? Because now he's talking about if he does become that person, maybe there's a pathway to approve autonomous vehicles that will directly help his company that he's the chief executive officer of. Can he do both? Is that legal?
Okay, now I've known Elon for a long time. He's never said, I want to go into government so I can get autonomous vehicles approved. That's not even on his mind. But listen to the question you just asked. Oh my God, could we have Elon Musk go to government and make it efficient? I don't know. We just had a hurricane in North Carolina, and the only way people can get the internet is because of Elon. We have astronauts stuck in space. The only way they could come down is if we ask Elon. We just watched a rocket that no government did, but Elon sent it up, created an engine only made in America, where before him we paid Putin for their rockets, and he lands it right on back. I would pray Elon would come in and make our government efficient. My God, you would have accountability. You would have a government that works for the people. And does he want any money from it? No. We want more people like that. I mean, there is no other country in the world, every single one would beg for Elon to come and do it. And somehow the Democrats want to think that's wrong. That is what's wrong with them.
He's going to be tweeting this clip a little bit later. Speaker McCarthy, it's good to see you.
Hey, thanks for having me back.
Thank you, sir. Appreciate it. The former House Speaker there, Kevin McCarthy. In the next hour on this programme, we'll catch up with Binky Chana at Deutsche Bank. We'll speak to the Lebanese economy minister down in Washington, D.C., Ahmed Salam. We'll speak to Steve Rashudo of Mizzou with jobless claims just around the corner. That data 35 minutes away. And the Bundesbank president, Joachim Nagel. As some people talk about a 50 basis point interest rate cut in Frankfurt, Germany, at the European Central Bank at their next meeting. Equity futures, as we count you down to the opening bell, 94 minutes away. Futures near session highs, we're up 0.5%. From New York, this is Bloomberg.
We want to make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo Pet Products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company.
Wow, that's quite the outfit you've got on.
Yeah, as we can see, we can chat in real time to ChatGPT. And not only that, we can interact with it with video as well.
And I swear, if you look at Barrett's GPT history, it's all equations like this.
Now that you can do linear equations, can you show us something more complex?
I think so. Okay, next let's try something coding related. So let me take out a computer for this. Okay, so I'm going to open the ChatGPT desktop app, like Mira was talking about before. And to give a bit of background on what's going on, so here we have a computer, and on the screen we have some code, and then the ChatGPT voice app is on the right. So ChatGPT will be able to hear me, but it can't see anything on the screen. So I'm going to highlight the code, Command C it, and then that will send it to ChatGPT, and then I'm going to talk about the code to ChatGPT. Hey, ChatGPT.
Hey there, how's it going?
Yeah, it's going really well. I was wondering if you could help me with a coding problem today.
Of course, I'd love to help you out. What's the coding problem you're dealing with?
Okay, I'm going to share with you some code. 1 second.
Sure thing, take your time.
Okay, so I just shared some code with you. Could you give me a really brief one-sentence description of what's going on in the code?
This code fetches daily weather data for a specific location and time period, smooths the temperature data using a rolling average, annotates a significant weather event on the resulting plot, and then displays the plot with the average, minimum, and maximum temperatures over the year.
Which months do you see the hottest temperatures, and roughly what temperatures do those correspond to?
The hottest temperatures occur around July and August. The maximum temperature during these months is roughly between 25 degrees and 30 degrees, 77 degrees Fahrenheit to 86 degrees Fahrenheit.
What?
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
There is a extraordinary uncertainty tax on this economy.
You're not yet back at that extreme optimism, sort of peak euphoria territory. And really all it does is make the market more vulnerable to any kind of negative catalyst.
The trend remains a disinflationary one and therefore supports a cutting cycle.
It's the fundamentals of the U.S. economy and earnings and interest rates. That's what we focus on.
The U.S. economy has once again proven more resilient than fears had suggested.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bout, 30 minutes away from economic data in America. Jobless claims just around the corner, and your scores are shaping up as follows on the S&P 500. Good morning to you all. On equity futures on the S&P, we are firmer by 0.5%. On the Nasdaq 100, we're doing quite nicely as well. On the Russell, we're doing okay. It's a bit of a bounce in this equity market. Likewise, in the bond market, we're seeing Treasury yields lower on a 10-year by 5 or 6 basis points. We're down to 4.1899. On a 2-year, we're down 3 to 4.04%. The estimate for jobless claims, 242,000. The previous week, 241. There is going to be a big hurricane disruption somewhere in this labor market data through the next month.
And everyone's going to tell you, just look through it. Look through the noise of these disruptions. Citi comes out with a note from Andrew Hollenhorst. This leaves us watching initial jobless claims today in the states not impacted by recent hurricanes. Maybe to get a clearer read, a clean read on what is actually going on in the labor market. And he's saying for any layoff trend changing, signals of economic activity that have been confusing at best leave us expecting a September employment strength will not last. It's going to be interesting to see where those claims come in, and if you look at certain states, how different they might be.
We had a big upside surprise in the September jobs report. That number was 254,000. For the month of October, a sneak peek of the estimate in our survey, 135K. Those numbers drop on November 1. November 5th, we've got an election. November 7th, we've got a Federal Reserve decision. We've got a lot going on over the next month or so. A lot coming up this hour as well. Coming up, we'll catch up with Binky Chana at Deutsche Bank on the scorecard this earnings season. We'll speak to Steve Rasciuto of Mizuho, saying we're searching for answers in all the wrong places. And we'll speak to the Bundesbank president as some traders look for a 50 basis point rate cut from the ECB. We begin this hour with stocks higher. Tesla kicking off Max 7 earnings with better than expected results. Deutsche Bank's Binky Chana with this to say on earnings season. It's still early, but the results so far are slightly stronger than expected going in, especially for the financials, where investor positioning in our reading was below neutral. Binky joins us now for more. Binky, good morning to you.
Good morning, John.
Good to see you. We've got a big week next week. All the major tech players with the exception of NVIDIA. How high is the bar for those tech firms?
So I'd say the bar has been fluctuating. It was extremely high at the beginning of the year. It came down a little bit as positioning came in. Positioning's kind of been going sideways to slightly higher. And just to be clear, positioning tends to align with earnings growth. And if you think about earnings growth for the mega cap growth in tech companies, I think it's important to keep in mind that basically this very, very clear trend channel over the last 30 years. And so if they deliver, as they have been, the best possible earnings, they hug the top of the channel. That's 11% growth. That's down from 40% that we printed in the fourth quarter of last year and 38% in the first quarter of this year. So the slowing, we would argue, is inevitable. It's happening, but it should not be confused with bad earnings. So you are absolutely right that it's all a question about the bar and the expectations. And I would say, it's going to fluctuate as you go through sort of this period. It's not all meant to happen on one fine morning. It is going to take a while because there is genuine uncertainty out there.
We don't often do single names with you, but there is one single name which is basically a market, which is NVIDIA. Torsten Slok, a man you know well, now at Apollo, wrote this morning, that it's now bigger than the total market cap of 5 of the G7 countries. That foreigners own 18% of the US stock market, and the bottom line for him is that global equity markets, including retirement allocations to equities, are basically leveraged to NVIDIA. What do you think will define earnings season? Does it come down to that one name, one theme, AI?
No, I don't think so. The size means they're definitely important, the size and the growth rates. But no, I would say, the issue of the year has really been whether we would broaden out, and I would say that is happening. It's, for it to happen, you need the fundamental underpinning of earnings growth also rotating, which is what would drive moves in positioning. I just spoke about positioning and earnings growth. So it's all happening. I think, unfortunately, it's happening rather slowly and pretty noisily. And the noise mostly comes really from energy and materials. And that's really oil and commodity prices. And you have to go 2 years back to Russia, Ukraine, but we would argue it is happening. So for this quarter, for example, we're looking for a sort of a modest deceleration from 12% to 9% in round numbers. About half that slowing is just the year-on-year decline in oil and commodity prices, so it's not really telling you anything about where the economy or earnings are going. The other half's coming from what we already spoke about, which is the well-understood, generally, at least among the analyst community, both bottom-up and top-down, that, their earnings growth is basically slowing from mega-cap growth in tech. Everybody else kind of going sideways, but, by the same token, I mean, if you look at Q4, right now, we're looking for sort of year-on-year growth in the mid-teens.
Those tech firms responsible for some massive buyback plans as well. You often refer to what you call this robust demand backdrop for US equities. Can you walk us through where things are at with regards to that?
Yeah, so conceptually, basically, I think one very simple way to think about equities from a demand-supply point of view is how existing equity money is positioned. So that's our positioning measures. There's new money coming into equities, that's equity inflows. And if you want, you could put it on the supply side, because it's not nice to put everything on one side, is buybacks. And so, if you think through where we are on each of the three in terms of positioning is actually today lower than it was at the July 16th peak. How can that be when the market is a little bit higher? Because we've had very robust inflows into equities. And that's been going on for quite a while. It's not just equities that are getting robust inflows. Bonds have been getting robust inflows too. So positioning has upside even to the mid-July peak. We have very robust inflows. And the biggest driver is really the buybacks. And buybacks basically move with earnings. So we're looking for 11% earnings growth next year. That by itself argues for 11% upside in buybacks. And then there is the matter of the buyback payout ratio, which tends to fluctuate between 40 and 60%. We are sitting at the middle and at around 50%. So if the economic backdrop improves and corporate confidence continues to improve, then you're going to see that buyback payout ratio also go up. So in short, all three cylinders from a demand-supply point of view look very, very robust.
So what could spoil the party? Because you talk about catalysts. Two you mentioned are geopolitical risk and the U.S. election. How do you take those into account with this pretty rosy picture you have?
So what I would say is, the election, for example, I mean, the traditional pattern is for the equity market to pull back, basically, starting about a month earlier. And it really sort of, the way to think about that is the premium for volatility in that first week, basically, after the election. As Jonathan already stole my punchline, which is it happens to coincide with all the early month macro data that comes out at the same time. And it is only a few weeks since the last payrolls report, which had a huge impact. So I would say today there's a whole bunch of catalysts having an impact. And if you look basically across asset classes, just look at the VIX. I mean, so, a little bit below 20 to many people seems very reasonable. But if you compare that basically with what actual volatility is doing, you've got almost a 10 percentage point premium in the VIX. That's just enormous by historical standards. And it's not just equities. You can do the same for rates. Look at the move relative to realized volatility. Look at currency, the CVIX. The same is true in currency. So the market is really all voled up, is the way I would put it, on these multiple catalysts or risks.
Definitely, an angsty market. But you have people coming on talking about this idea of a Trump trade in equities, in the bond market. Why don't we see it in the tech companies?
I would emphasize more the uncertainty basically coming from the election and the market really buying protection for potential volatility around the election. I think it's a little bit too early to start to factor in all, the policies and the implications. There is a natural tendency for all of us to focus on that. But, I mean, just take the last tax cut. I mean, the tax reform package. We have the 2016 election. By December, proposals were being circulated, feedback was being sought. And when did the tax reform come to pass? It came to pass in late 2017, when I remember, me and my team writing a piece called "With Nothing Priced In for Tax Reform." So there's a lot of water that flows under the bridge between now and when actual things happen. I mean,
well, when it comes to the
tariffs,
when it comes to the corporate tax rate, there's a huge spread though between both these candidates, 15%, 28%. But to your point, that likely won't get finalized till the end of 2025. So does that get pushed out for a 2026 story for these companies?
Yeah, it will depend on if and when it passes, and that's sort of a complicated route to basically, bet on right now. I mean, what I would offer in terms of thinking about corporate tax reform and earnings is there is no doubt that there is an immediate impact. But over time, if you look at the S&P 500 from the 1930s till today, there is a very, very, very clear trend line. And now, on this chart, you should overlay the corporate tax rate in the U.S. It's done lots of things, and the trend hasn't changed. And I'm not saying that equities are the present value of really trend earnings, but if they were, then, the trend hasn't changed. So shorter-term impacts, yes. But long term, no.
This is a long-term policy discussion. I'd love your thoughts on the shorter term, because I imagine a lot of people will be dialing 1-800-BINKY when we wake up November 6th with the very real possibility we don't have a result on November 7th, on November 8th, on the 9th, the 10th, and maybe even longer. Sure. We've talked about that Federal Reserve decision a million times 2 days after the election. They might not know the results. What are you going to tell people that week if we don't have results to this election, when it could have a pretty profound impact on policy years out? Is that what you're going to say? You're just going to say, ultimately, look at the trend line, keep buying stocks, it's going to be okay? What will you tell them?
No, it's about basically, what's happening shorter term to positioning and, of course, perceptions of what's going on. So I think basically, a result that takes time really doesn't, to resolve itself, assuming that it does resolve itself, doesn't really change the story. I mean, it's instead of a one-day event vol, it's about a few days of event vol. But the point is really, does it pass?
Is that a dip you'd buy?
I'm sorry?
Is that a dip that you would buy?
Yeah, we think of it as a temporary pullback, basically. And so going back to your question, is the election a risk? I mean, historically, presidential elections haven't really changed the business cycle. At the biggest, highest big picture level, equities are about the business cycle. So, and I would remind that, once anybody comes into power, they have a strong incentive not to destroy the business cycle. So, there is a built-in check there.
Is that how you see a Republican administration? That they will be constrained by where the equity market is, that they'll be regulated by it, responsive, sensitive to it, in our experience based on what happened first time around with Donald Trump?
So I think the evidence from the last time around is very, very clear. I have a piece on it. I can dig it up. Every time the trade war, sort of fired up, let's put it that way, equity market went down by 10%. I called it Trump relenting, but he would basically argue we have a deal. And the market would bounce. And then he would say, no, we don't actually have a deal. We're going to escalate. The market will go down. So, so are we going to get more pullbacks? Yes. But did it change the trajectory completely? No.
I call it the presidential put, which is basically the same thing. And we were talking about this earlier this week. We all remember that time when the equity market was gapping lower and the president ultimately pretended to have a call with China and suggested that things were better than they were.
Because that would mean that, okay, the equities can then start to rally again. So basically puts out a tweet, puts out a statement, says something to a reporter, and equities fall. I mean, this happened as well with him wanting to rip up NAFTA and then sort of had to massage the message because the Dow Jones was doing so bad. And ultimately, I think, Jonathan, you've called it. That's what he's regulated by.
Binky, it's good to see you.
It's good to see you.
It's always good to catch up. Thank you, sir. Send over that piece.
Pleasure. I will.
I'd like to read that. How old is that piece? A few years?
It's from the last administration.
Yeah, there we go. I'll have a dig through that.
It's at least 4 years old.
Binky, appreciate it. Cheers. Fantastic to catch up. Thank you. Binky Chowder there of Deutsche Bank. Looking ahead to the earnings next week. Massive week for earnings. You'll hear from all the major players. We'll hear from Apple, Microsoft, Amazon, Meta, Alphabet. You've got to wait until November 21 to hear from NVIDIA. And then once we get through that, we can really focus on a big one. November 1, we get the payrolls report. Then a few days later, November 5, November 5th, we get the election. 2 days after that, Chairman Powell's going to sit there and try and do a news conference, and hopefully he's got some clarity on what the future looks like, because we might not have any at all around this table. Equity futures on the S&P up by 0.5% with an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, Johnson. Earnings we have already gotten this morning. KKR, those shares are higher 2.5%. Third quarter profit beat estimates. Its transaction fees also hit a record for its capital markets business. The growth was driven by fees from managing $624 billion. That's an 18% jump in AUM versus last year. Elsewhere in the quarter, it raised $24 billion in new capital, and its PE funds returned 5%. IBM shares, those are falling in the pre-market trade 3.5%. It reported disappointing sales for the third quarter. It was hurt by slowing consulting demand. Revenue rose just 1% in the period, and that just missed analyst estimates. The CFO of IBM says that clients aren't expanding budgets, and some generative AI projects are coming at the expense of traditional consulting. Boeing factory workers have rejected a new labor contract offer and will remain on strike. It's a fresh blow to the now struggling plane maker. About 64% of union members who cast ballots Wednesday voted against the tentative deal. The contract would have raised their wages by 35% over 4 years. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the morning calls, and we'll head down to Washington and catch up with Bramo in just a moment. As the IMF World Bank annual meetings kick off in the nation's capital. From New York, this is Bloomberg.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Equity futures on the S&P, bit of a bounce after a three-day slide. We're up by 0.5% on the S&P 500. You can thank one name for that, Tesla. Let's start with the morning calls. Just one stock in focus. That one right there, Tesla. First up, Bank of America raising its price target to $265, pointing to earnings that beat almost across the board. We're up by almost 14% in the pre-market. Goldman Sachs raising the EV maker's price target to $250, highlighting an upbeat outlook for 2025 deliveries. And finally, Wells Fargo raising its price target on Tesla to $125, noting the company's better than expected gross margins. That's the latest story here stateside. Let's get down to Washington, D.C. for the latest from the IMF headquarters with Lisa standing by. Lisa, we've talked a ton about policy from the Federal Reserve. You and I have been going back and forth on this for a while. What about the ECB? How can we be talking about 50 basis point reductions at the Federal Reserve when growth is so much worse in Europe and they're taking things meeting by meeting? Lisa, is that about to change?
That's really one of the big questions here, and you see sort of bifurcated ideas coming out of different regions of Europe, which is one of the challenges, frankly, for the European Central Bank. You have the Bank of Portugal coming out and actually talking about the potential for a 50 basis point rate cut even as soon as December. But then you have Joachim Nagel of the Bundesbank talking about the potential for, maybe more tempered rate cuts, even as that economy really is the one that's struggling. So which is it, and where is the priority at a time where potentially inflation is coming down at a pretty rapid pace, but so is growth?
Lisa, European capitals are really focused on November 5th, even more so than maybe we are here in the United States. How much more is a 50 basis point cut likely if we get a former President Donald Trump and they're concerned about tariffs on their exports into the United States?
Well, that's a big concern. And honestly, this to me is the big elephant in the room here at the IMF. There's this feeling that right now, the law could change in just about 2 weeks, less than 2 weeks, although it's unclear when we actually get the results. And that's really, I think, what is sort of hanging over everybody. And interestingly enough, Joachim Nagel, the Bundesbank central bank president, is talking about the prospect of what that kind of unilateral policy would do for the U.S. So there's a lot of sort of soul-searching, but also castigating by a lot of members of central banks and policymakers around the world as people try to get a sense of exactly how much their lives are going to change. Look, this is such a bifurcated picture right now because you have the likes of the ECB and the Federal Reserve talking about inflation, talking about the potential for weakness, but on the margins. And then you have the Lebanese head of finance here, and you have also the Israeli central bank president, and it's just such a different moment whether you're dealing with the economies of war or whether you're dealing with the economies that are doing okay and trying to figure out, where inflation is going to come and what is the priority. This is definitely something of a fraught meeting.
Lisa, appreciate the update. Thank you. We'll catch up with Lisa again in about 30 minutes' time. Must watch. Sitting down with the Bundesbank president, the German central bank governor, going into an ECB meeting over the next month or so. After reducing interest rates 25 basis points, but confronting some really weak economic data, and now having a real conversation for ECB watchers about the prospect of a 50 basis point reduction at the European Central Bank. Here stateside, the data are expected to be okay. It drops in about 7 minutes' time. Jobless claims expected to come in around 240. Mike McKee's with us for more. Mike, what are you looking for, and how distorted will this data be?
It's probably going to be a little bit distorted still by the hurricanes, so people will be watching to see if we come down at all. It doesn't look like, and from what we saw in the Beige Book yesterday, it doesn't look like companies are laying people off, so that may not be an issue at this point. It's just going to be hard to get a clean read because of the external activities that have happened on jobless claims. But we're going to see at least something that will get people talking about next week.
And then payrolls. And that's what we want to talk about next week. November 1, payrolls. What's a strong number next week? We had a conversation with a guest earlier, Brian Nick of New Edge, who suggested that maybe that number was like the high 100s, 175, 180. That would be a really strong number given the disruption we're expecting.
People are all over the map on this one because they don't know the impact of the hurricanes because of the timing when they hit. People could have been on payrolls for an hour, which is all you need during that time period. You also got the Boeing strike continuing, and you have whatever fallout there is from that. If other companies have to lay people off because Boeing doesn't need their parts in the meantime. And so you have a real range of views, and I think anything around 150 or so would be considered great news. Bloomberg Economics is thinking we might get a negative number.
Well, every analyst keeps saying, just look through this data because it's very noisy. Can the Fed do that?
Yes, the Fed can do that. If it were a terrible, terrible number, really they're going to look at unemployment. And the hurricanes and the strikes won't affect the unemployment rate. So if unemployment doesn't go shooting up, then the Fed doesn't really have to worry about it. They can look through it and they can say a lot of this is temporary and people remember the hurricanes, so probably won't affect things. But you were right a minute ago when you said the rest of the world is really concerned about the U.S. election, and that isn't going to affect the Fed this time, but it may in the future. I was at the IMF and IIF meetings over the last 2 days, and the U.S. election is all they're talking about.
Yeah, it looms large, yet you don't see it in the outlook so much. It's kind of like this big elephant in the room that everyone talks about, acknowledges, but then don't put in the forecast because they don't know what to do with it.
I had one central banker say to me privately that their hope is that if Donald Trump is elected, that the markets crash because they want the markets to send a message to Trump to don't do this trade war
Comes
stuff.
to John's point that he's regulated by the Dow Jones.
Can you tell us where that central banker's from?
I would say from Europe.
Okay. It's kind of shocking for them to be saying things like that, you know. Mike, it's good to see you. You're going to be sticking with us. Jobless claims are about 5 minutes away. We're looking for 242. The previous week was 241. And as Mike has suggested, we're looking for a big distortion in some of these numbers as well, off the back of the hurricanes that we've seen hit several states across this nation over the past few weeks. We'll catch up with Steve Rasciuto of Mizuho up next.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the
number is for the week before. So apparently a lot of people got out, filed unemployment claims because they were out of work because of either the Boeing strike or the hurricanes that hit, and now a lot of people have fallen off. We do see a big increase in continuing claims, 1,897,000. That's up from 1,869,000. So people are still on the rolls, and we wouldn't expect them to be able to go back very quickly given the damage that was done by these storms. But 227, still a very low number. We saw the Beige Book on Wednesday say companies are not laying off people. They're not hiring, but they're not laying off. And at this point, everybody's kind of waiting to see what happens going forward.
So massive guessing game for 2 Fridays' time. What would you suggest that number might look like in 2 Fridays' time, given what we're learning from jobless claims over the past few weeks?
You're going to see a pretty good number probably, but there's so many wild cards with the storm that it's hard to know exactly what we're going to get. The Fed's going to focus, as we said, on the unemployment rate and not the overall job creation number. They'll look through that and they'll want to see what the participation rate is and that sort of thing. But a lot of these numbers could be a little bit distorted, so they'll probably look through it. Doesn't seem to be any reason that they wouldn't cut rates after the election. There's whatever is going to happen from whoever is elected is going to take a while. It's not going to happen right away. So they keep going with the 25 basis point cuts. That seems to be the consensus on the Open Market Committee. Whether or not the number is really strong, there would have to be something really, really wrong with that report for the Fed to be calling up the folks at certain newspapers and hinting at we might do something different.
What would that number be? What is really, really wrong?
It would probably be something that is really strong.
Yeah.
Because the idea of a negative number is not inconceivable given the weather situation and the other things going on in the economy. So I would say if you got something north of 200,000, that would be a real surprise. People are not expecting that, but then the Fed might want to reconsider whether it cuts rates at all at that November meeting.
Might stay close. Jobless claims coming in at 227. The estimate in our survey, 242. Going into this, if you look at the Treasury market, just before this number dropped, we were south of 420, just north of it. This market's still rallying in the bond market, but giving up some of that bid. Yields are lower by just 3 basis points now, 421.57. The 2-year at the moment down 2 basis points, still just north of 4%, 4.05%. And for a snapshot of where the equity picture is, still elevated, still near session highs, up by about 0.5% on the S&P 500, with that outperformance coming from the NASDAQ 100. Thank you, Tesla. We're up by 0.9% on the NASDAQ 100. Just to round it out for a snapshot of foreign exchange, the euro dollar still just south of 108, 107 93. With us around the table, Steve Rasciuto of Mizuho. Steve, it's good to see you.
Good to see you as well.
Let's start with the claims number. What do you make of that? What do you think about it?
I think the claims numbers are showing you exactly what's happening in the economy. Nobody is getting fired. Corporate America is sitting there saying, you know, I'm in a pretty good position. The economy's doing well. Am I rushing out to add a lot of workers to my employment? No, but am I looking to trim any workforce against the backdrop of demand I have? The answer is no. I think when you're looking at the Fed, I think the unemployment rate actually becomes the critical trigger for them, as we were indicating earlier and Mike mentioned before. You know, I think if it were to drop to 4% on the unemployment rate, I think they're going to have difficulty saying, well, we have to cut rates in November. So I think that's kind of the driver here in terms of where they go in the November meeting. Look, every meeting is live. They want to cut rates. They've told us they want to cut rates. It's just a question of, does the data give them the opportunity?
Can we talk about that just a little bit more? So unemployment at the moment is at 4.1%. What is the difference between 4 and 4.1? Why would that change things for them that much?
They drew a line in the sand at 4.3. And it was the progression up to 4.3 that justified the move. Now you've gone from 4.3. If you get back to 4, it's kind of like, what's my real progression now? And if my progression is we're not really going anywhere, then if I'm trying to say I want to maximize employment and I want to keep a full employment economy, I got half a percentage point better than full employment. So what is my logical argument for saying I have to go in November? I don't. I have forward rates are already very accommodative. Forward rates already anticipate that they're going to get us to 3.5% fairly quickly.
Steve, it's going to be a pretty incredible week. That's the week of the election, November 5th, 48 hours, then you have the Fed meeting. How difficult might it be for them to talk about where the economy is going, to make a decision on the rate cut, if we don't have the outcome of the U.S. presidential election?
Mike kind of hinted at a very, very important point. Fiscal policy takes time, okay? And to the extent that the Fed's window of what they're trying to influence is, let's say, 6 months to a year, and it's going to take time into 2025 to get fiscal policy enacted from whatever we wind up settling with. And then it really comes down to is the White House also in control of the House of Representatives? If the White House and the House of Representatives are in cahoots, you could always buy a senator's vote. Okay, so you could always get something done.
I didn't know it was that easy.
It is that easy, and especially with the vice president being a tying vote. And the majority is going to be very slim. So it winds up coming down to a very, very simple calculus. Are we looking at mid-year 2025 as possible, earliest for fiscal stimulus, or are we talking February 2026? In that environment, they have an opportunity to continue to do what they're doing.
So I think for tax cuts, you're looking at 2026. For tariffs, you're looking at day one. Is that why you think potentially the bond market is picking up on that?
Well, I think the bond market and the equity market are overplaying the tariff story. Let's be honest. This is a guy who's a negotiator, right? So I'm going to go into negotiations with all of these people around the world to try to get concessions. Am I going to throw out, I hate to use the term, my trump card day one? Or do I just dangle it out there to annoy everybody and threaten with it to see if I can get the concessions I want? This is what he did the first time through. I'm assuming he's going to do that again. And in some instances, it will be make your contributions to the Ukraine situation. We're sick of doing it, and that's clearly his stance on that, if he were elected. On the other hand, you know, for other people, it's, well, open up your markets. You know, this hasn't been, free trade hasn't been fair trade. And therefore, he has an argument. And people jumping to the conclusion that tariffs are automatically inflationary, well, let's look at it this way. We went out and we raised a lot of tariffs last time through, especially on China, and everyone said, oh my God, it was going to be horribly inflationary, and it wasn't. So we were talking about embargo Russian oil, and oil prices were going to go through the roof, and it didn't happen. These are complex systems. There's a world of excess supply of tradable goods. They're going to go somewhere.
It turned out they weren't successful at locking up Russian oil, which had a big part of that. We heard it from a Biden official as well this morning that their effort, their emphasis is on reciprocity. And I think you're going to hear a lot of that from officials, whoever is in charge over the next several years in this country. I want to finish on rates with you just quickly. Sure. We know what the Federal Reserve thinks the range of estimates is on neutral. They tell us. Where do you think it's ultimately going to turn out to be?
4%.
4%.
Yeah, I think their estimate of neutral is still much too low. I think they're gravitating upwards, which they should be, because the economy is proving to be much more resilient, suggesting that they really aren't as restrictive. If you look at a simple Taylor rule, where we are, where we should be right now, and that's telling you that, they aren't terribly restrictive. I think the data is telling you they're not terribly restrictive. I think 4% is if you believe they're going to get a 2% inflation and you've got a 2% real yield. And I think the 2% real yield is valid, because the lower R-starred estimates were based on that post-financial crisis pre-COVID period, which to me was an enormous anomaly. Saying that was the new normal was the biggest mistake that was ever done in the financial markets. That was never a normal. That was an anomaly.
It's good to see you, sir. It's good to catch up. Appreciate it. Steve Risciuto there from Mizuho. Passionate as ever about all of this stuff. Jobless claims coming in at 227. That's a big downside surprise. We were looking for 242 with an update on stories elsewhere this morning. With your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Shares of Southwest and American both lower in the pre-market by 1% and 2%, even though both companies reported earnings that beat. Southwest's profit more than doubled Wall Street expectations. It said it's taking urgent steps to control expenses in the midst of a bruising fight with Elliott Investment Management. American said its full-year profit will top estimates, but did note higher costs. Tesla shares, those are rallying in the pre-market, up now 14%. The EV maker reported its biggest quarterly profit in more than a year. It said its Cybertruck turned a profit for the first time. CEO Elon Musk also said the company aims to officially roll out ride-sharing in Texas and California next year. Bloomberg LP has partnered with the Robinhood Foundation to launch a charitable stock-picking competition. Starting in November, participants will compete for a charity of their choice by selecting both a long and a short stock position over a 6-month period. The competition is for charitable purposes only and does not constitute financial or investment advice. Stay tuned for an interview with Greenlight Capital's David Einhorn, a Robinhood Foundation board member, on Bloomberg TV. That is at 11:30 a.m. Eastern. To learn more. And that's your brief, John.
Very cool. Don't miss that. Danny, thank you. Thanks for this morning. Up next on the program, don't miss this. We'll set you up for the day ahead, and Lisa will be catching up with the Bundesbank President Joachim Nagel in just a moment, live from IMF HQ in Washington, D.C. That's next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
only on Bloomberg. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Counting it down to the opening bound just around the corner. Equity futures right now on the S&P 500 shaping up as follows, up by 0.5%. Let's get to the trading diary. The Canada through the rest of this week and into next week. At 9:45 Eastern, we'll get S&P Global PMIs tomorrow. Durable goods and UMich consumer sentiment Monday. Ford earnings Tuesday. Jobs data and more big tech earnings from Google Wednesday. We'll get an initial GDP read plus more results from Meta and Microsoft Thursday. Another round of claims, core PCE, and you'll get both Apple and Amazon results. And on Friday, it's the big one. It's the payrolls report. What a week we've got coming up through next week. Let's turn back to DC. Global financial leaders gathering in the nation's capital as the IMF annual meeting continues. The group pointing to a number of downside risks threatening global growth in the years ahead. Lisa's back with us from the IMF in Washington alongside the Bundesbank president. Lisa, over to you.
Thank you so much, John. I am here indeed with Joachim Nagel of the Bundesbank, the president, as we said, here in Washington, D.C. with world leaders as well as policymakers from around the world. And I have to say, you've been to a lot of these, President. How is this year different? What's your takeaway from this year's confab?
So today is the second day, but I have to say it's very special meetings. We are living in complicated times. Maybe more compared to the years before. Many geopolitical risks, and this is part of the discussions we have in our meetings.
So when you talk about geopolitical risks, often that's code for, will Donald Trump become the U.S. president or will Kamala Harris become the U.S. president? It seems like that's very much a focus under the hood and not so under the hood here at the meetings. How much is that dominating your discussions?
I think now it's 12 days ahead of the U.S. election. What I definitely will not do, I will not speculate who will win this race. But what is also clear that we have to discuss different scenarios because it comes with an impact. So this is also for sure, especially for Europe. So this is also part of the discussion to think about what could happen, what are the spillovers to global economy. I think these are important questions. These are important questions that are arising from the U.S. election.
How much do you see Germany's economy as being affected? Sort of what are the scenarios for you if one candidate wins over another?
Germany is a large, open economy, so we are very export-oriented. So all this discussion about tariffs that are harmful to Germany, and I believe definitely not helpful for both parties, both sides of the Atlantic. I think we should more or less consider all this and find out what can we do. I think we have to talk to each other, but there would be very severe consequences when tariffs would be introduced in the way they are being discussed.
Do you think that they'd be inflationary for Germany?
Yes, there is a certain probability if that is more or less getting into a direction that the exchange rate is being influenced by the tariffs. Yes, there is a certain risk that this could also have disinflationary effects.
Disinflationary effects?
Yeah, could be. When the euro is depreciating against the US dollar, then imports are getting more expensive. Also, it could have some, let me say, could push inflation up.
So there's a real question here about the inflation ramifications of this, and we can go into China and how that plays a role too with the overcapacity coming in and whether that would actually lead to potentially lower prices in goods. But right now it seems like certainly the conversations we have on surveillance, people are talking about how, why isn't the ECB cutting more? Especially when the growth outlook isn't that great. We got PMIs out of the region this morning. You've been actually one of the more cautious among the committee to really cut rates. Why?
I think we showed our commitment. It's not just me. I think, let me mention here, we have a clear mandate, a single mandate. This is price stability. And we were very committed when we fought against inflation. We hiked 10 times. Now we lowered 3 times the inflation rate. We are on track. We have we are rather confident that we will achieve our target maybe by mid of next year. So this is a success story. We shouldn't forget that. And I have to repeat that we are data dependent on our single mandate, achieving price stability.
Okay, but we've had actually inflation come in below the 2% target in the Euro region. We've seen growth really materially slow. Haven't you already achieved the goal?
I think that was a single month, that September month, inflation came out lower than we thought. On that basis, we decided last week to lower interest rates by 25 basis points. But we shouldn't be too hasty. We should be cautious, keep our track to really look what data is coming in. We have in December, when our next meeting is coming, we have our new projection. The new projection will include the year 2027. And then we have maybe more guidance, more orientation. But I'm not in favor to speculate too much what is necessary in our December meeting. This is definitely, I believe, not helpful.
To speculate?
To speculate about what we could do or what we could not do. We'll have all the optionalities. And these optionalities are based on the data that we have in December. And we shouldn't forget, and we started that interview by thinking about what are the uncertainties, geopolitical risks. Then we are behind the US election, so we have then more information, what's going on, and then we can take new decisions.
Okay, so you're saying that actually you are open to a range of potential decisions. You just are trying to be open-minded. So are you open to even an outsized rate cut at some point this year, or do you think that it's important to go in 25 basis point increments?
Again, I will not speculate, because I think this is not helpful. I think we did our job in a way over the past 2.5 years that we gave clear indication that we are thinking from meeting to meeting, data dependent in an uncertain world, and that worked pretty well. And I will more or less stay on that course, and I will react and decide when I have new information.
So there's been a lot of discussion about how the U.S. is the Federal Reserve of the U.S. is a dual mandate central bank, and there's this focus on both inflation as well as employment, as well as the labor economy. Do you feel like your hands are tied because of the single mandate over at the ECB?
I think the Euro system, the Euro itself, is a success story over the last 25 years. 25 years now. And we are not a political union, we are not a fiscal union, we are not a capital market union, we are not a banking union. Our mandate, our single mandate is crystal clear, price stability. And we achieved price stability over that course of the last 25 years. And so we shouldn't change our strategy in a phase where it is really complicated to do monetary policy. The last 2 years were complicated. The German government did well to overcome, for example, the energy crisis in 2022. There's a certain probability that there is stagnation this year, maybe slightly negative. But also next year, and the IMF is more or less forecasting that we are going back to a growth path, not a high growth path, 0.8. But this is not as bad as some of us more or less address it when they're commenting on the German economy.
So do you think that it's an inaccurate assessment to talk about the auto manufacturers and the sort of structural challenges?
Maybe it's not precise enough. I think, yes, there are structural issues. So we have to do our homework. I think we have to do more investments. We have to invest in all the future new developments in AI, digitalization. We have to overcome our demography problems. So there are several things we can do, but we know how we can do it. And we shouldn't forget, in the past, taking the experience from the past, the German industry is a very capable one. We shouldn't underestimate the adaptation capacity, maybe strengths of the German economy. So I'm rather positive. And even the IMF today, Gita Gopinath said it, we shouldn't underestimate Germany. There's a good chance that we can more or less there's a good comeback chance.
If Donald Trump gets elected president in the U.S., do you still think that that comeback chance is equal?
As I said from the beginning, I will not speculate who will win the U.S. election.
We've got to have outcomes. Joachim Nagel, thank you so much for being with us. Joachim Nagel, the president of the Bundesbank in Germany. John, back to you.
Lisa, thank you very much. Appreciate the conversation. Let's just have a note on that conversation and what we heard from a German official at the central bank, the Bundesbank president. Headline inflation has a one handle. Eurozone PMIs came out this morning. The composite in the 40s, just south of 50, but in the 40s. The German economy is stagnating, arguably going to contract into the end of this year. One of its biggest industries, the auto market. Some of those car companies are on their knees right now and talking about cutting plants. And then this headline comes from the Bundesbank president: we shouldn't be too hasty with rate cuts. And Lisa asked the right question. Are you constrained by your single mandate, which is just inflation? Because if you had other things to focus on, you'd look around you and just think, my goodness, this economy's in a mess and needs some support.
And he's doing his best to try to say that maybe Germany won't be too bad. But given the data you just referenced, given what the auto industry is doing, the manufacturing industry in Germany, it is looking dark and bleak. It's the rest of Europe that's actually holding Europe up. It's the periphery that's holding Europe up, not Germany.
Economic history will be the judge of whether this is the right approach from the ECB right now. Coming up tomorrow, look out for this. Lisa speaking to John Lipsky, the former IMF First Deputy Managing Director, the Citigroup Chair, John Dugan, and Jason Thomas of Carlyle. Coming up on this program as well, we'll catch up with Jim Bianco of Bianco Research, Mohammed El Aaron of Queen's College, Cambridge, Neil Dutta of Renmark, and Robert Sockett of Citi. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
This is Bloomberg News Now.
News when you want it at the touch of a...
A few minutes ago, we asked the live audience on X to submit a few requests for what they would like us to try out here. So I will take a couple of prompts. Okay. Bot Gaskar wants to know if GPT-4o is capable of real-time translation. Mark, you want to try this one?
Sure, yeah, let's do it.
All right.
Yeah.
I speak Italian, so we can just do English, Italian.
Let's try to do English-Italian. Sure, let's do it. Hey, ChatGPT, how are you?
I'm doing fantastic. Thanks for asking. How about you? How's your day going?
I'm doing great. So I would like you to function as a translator. I have a friend here who only speaks Italian, and I only speak English. And every time you hear English, I want you to translate it to Italian. And if you hear Italian, I want you to translate it back to English. Is that good?
Perfetto.
Mark, io mi chiedo se le balene potessero parlare, cosa ci direbbero?
Mike, she wonders if whales could talk, what would they tell us?
They might ask, how do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente sì.
Certainly, yes.
Great. Looks like it works.
All right. So the next one is from Burrito John 78, who asks, can you tell what you're feeling just by looking at your face? Barrett, do you want to give this one a try?
Absolutely. Let's try it out. Hey, ChatGPT.
Hey there. What's up? How can I brighten your day today?
Okay, yeah, so I'm going to show you a selfie of what I look like, and then I'd like you to try to see what emotions I'm feeling based on how I'm looking.
Sounds like a fun challenge. Go ahead and show me that selfie, and I'll put my emotional detective hat on.
Okay, so here's me. So what kind of emotions do you think I'm feeling?
It seems like I'm looking at a picture of a wooden surface.
Oh, you know what? That was the thing I sent you before. Don't worry, I'm not actually a table. Okay, so take another look.
That makes more sense. There we go. It looks like you're feeling pretty happy and cheerful, with a big smile and maybe even a touch of excitement. Whatever's going on, it seems like you're in a great mood. Care to share the source of those good vibes?
Yeah, no, the reason I'm in a really good mood is because we were doing a presentation showcasing how useful and amazing you are.
Oh, stop it. You're making me blush.
Amazing. Well, that's it for today on live demos. As you can see, this just feels so magical, and that's wonderful. But we also want to remove some of the mysticism from the technology and bring it to you so you can try it for yourself. So over the next few weeks, we'll be rolling out these capabilities to everyone. Today has been very much focused on the free users and the new modalities and new products, but we also care a lot about the next frontier. So soon we'll be updating you on our progress towards the next big thing. And before we wrap up, I just want to thank the incredible OpenAI team, and also thanks to Jensen and the NVIDIA team for bringing us the most advanced GPUs to make this demo possible today. And thank you all very, very much for being a part of this today.
Labor contract that would have increased their wages by 35% over 4 years. We'll have all the details and more, but let's take a look at where markets are trading right now, because boy, we are ripping, at least relative to the last couple days on the S&P 500, looking to snap a 3-day losing streak, and bulls have Elon Musk to thank for that. Of course, Tesla shares currently up about 14% pre-market. That's what you're seeing in the NASDAQ 100 as well. Your big tech index up about 0.8%, and even the bond market is behaving relatively. You do have yields a little bit lower right now to the tune of about 3 basis points, Matt, but still pretty elevated when it comes to the absolute level of the 10-year Treasury.
Yeah, those gains could be despite or because of the miss on unemployment claims. It was higher than we anticipated. Nonetheless, the economic data has been surprising to the upside. The white line here shows all economic data, even though the beige book seemed like a bummer. The blue line is labor economic data. Still surprising to the upside, but going flat with the jobless claims this morning.
Where else we have some upside surprises, of course, is in the equity market. We're going to watch a couple of stocks here. Tesla, big surprise, up more than 14% pre-market. We mentioned the blowout quarter. It led the company to forecast up to 30% sales growth for 2025. And UPS shares, on the other hand, also higher by more than 9.8, almost 10%, after returning to sales and profit growth for the first time in nearly 2 years. And American Airlines said that full-year profit should top analyst expectations, a sign that the pivot from a failed sales strategy is gaining traction. You have it up, though, only less than 0.2%, Matt, but still some green on the screen.
All right, we will continue to follow all the earnings out this morning. Earnings season getting busier and busier. And I was listening to you and that other guy on Bloomberg Business Week.
I think his name is Tim.
Tim Stenovec yesterday on Bloomberg Business Week. I was really surprised with Tesla, especially the margins. We were looking for like 17%. They've been coming down. They posted 19% and change in margins. That's a good sign.
It's funny because, of course, you drumbeat to the earnings, and it was a pretty down-and-out drumbeat because Tesla shares have had a really rough ride. But a real surprise here, I mean, when it comes to the actual results that they posted, also that upbeat outlook from Elon Musk. Of course, a lot of people pinning their hopes on that. He was pretty casual about it, though. He said something like 20 to 30% growth next year is his best guess.
That's huge.
That's huge. But again, you know, not exactly very formal.
Now, if you think Tesla is part of the Trump trade, then do you think that the stock is rising more or less than if we had been not just 2 weeks from an election at this point in time? So you have to wonder if there's more where that came from.
Well, exactly, because you could see a positive for Musk if Trump takes him into the cabinet, but maybe, as Tim pointed out, a negative for consumers, right? Not all like electric car buyers are huge Trump fans.
You also have to think about Elon Musk's divided attention. It's been a topic for a while. He has his hand in 6 different companies, but if he's in the government, I don't think he's necessarily concerned about the day-to-day of Tesla.
And honestly, real quick note, too, there's a lot of other promising data in the earnings, right? I mean, you're talking about the airlines all morning, and it is true that was a big trade that a lot of investors were waiting for a better comeback.
Right. I'm focused pretty solely on Tesla. That's not true. I'm looking at Hog as well. Bit of a disappointment from Harley Davidson, but let's talk about the bigger picture stuff right now with Morgan Stanley Senior Portfolio Manager Andrew Slimman. Andrew, everybody was waiting for, you know, as Katie said, drumbeat to Tesla earnings yesterday, and they really knocked it out of the park. But is it a proxy for big tech? I mean, is a car maker really a good signal for technology stocks?
I don't think so, which is not to say I think these companies are going to have very good quarters, but I wouldn't necessarily assume Tesla, so goes Tesla, goes the rest of the tech companies. But I will say this about Tesla. He does seem to love to surprise on the upside and downside. You know, don't forget, it was less than 2 weeks ago. He kind of disappointed on the rollout. Comes back with a great quarter. It's a
the rollout of the robo-taxi, right? Exactly. Which was a big ho-hum.
Andrew, you know, the reality is we are really just getting started with earnings season. Yes, there was a lot to love with Tesla, but next week is the really big week. And if you don't think that the Tesla earnings say much about big tech, how do you position for the rest of big tech?
Well, you get nervous. This is the anxious time. You know, these quarters get me nervous when there's big reactions, but I see no reason to think it won't be solid quarters, primarily because I think you would get indications leading up to it. But there will be volatility. But what I really focus on this time of year, and it's really important, is how will that impact next year's earnings? If you look at what's interesting about stock prices, they actually, yes, short term, they move on what happens in the quarter, but longer term, they move on revisions, not for the current year, but for next year. And I think that's because the market knows that the companies play games and they talk down their earnings right before quarters so then they can beat it. So there's a lot of gamesmanship, but what does it mean for out earnings? That's what is key. So I'm very focused on right now consensus for next year is 275, 276, bottoms up. Will that number go up or down after the quarter? I think that will determine where the S&P ends this year, because don't forget, when we get to the end of this year, next 4 quarters will be next year's earnings.
Yeah, and even if you can't extrapolate much from Tesla to the rest of big tech, you do have an interesting dichotomy right now between old tech, I'm talking about IBM having a terrible morning, and of course what's going on with Tesla. But Andrew, I actually want to get your thoughts on sort of the cross-asset relationships in this market right now, because you point out in your note that we do have much higher yields. They're starting to create an attractive alternative to stocks. And we know that high yields, at least according to the textbooks, are supposed to be bad for stocks when you think about DCF models, et cetera. But it seems like just when you're sizing up the relative valuations here, that bonds look pretty good.
Well, DCF is a very the point you mentioned about DCF, this discounted cash flow type situations. When the Fed, if you go back to July 9th, when the Fed said, okay, we're going to be cutting in the future, all stocks that really priced off what's called the DCF model, which is I take the risk-free, I look at future earnings and I discount it back using some type of DCF, those types of stocks took off. So in other words, small cap, companies that have fast growth rate, and then you use a risk-free rate because yields came down. And so those stocks did very, very well. But the problem is now yields have reverted. So suddenly maybe people's DCF models are, wrong, and the risk-free rate is higher. So I think that's going to weigh on stocks, small cap, or some of the more cyclical stocks that are more geared to lower rates. And that's what's really worked until just recently.
I mean, we're looking at a 10-year yield right now, 420, 421. A lot of talk on this program, and I know a lot of talk in your office as well about when or how to move cash out of money markets, what to do with it after. Do you really want to, if you're worried that we could see rates rise, we could see tariffs, which are perceived as inflationary by a large part of the population? I mean, do you leave some there? Do you need some dry powder for post-election?
Matt, it is, when I talk to financial advisors invested in our funds, it is the number one. I get this every day. Hey, I have clients that were content with 5% in money markets or 1 year, can't get them out. What are we going to do? They're going to want to get more invested if rates come down. When is a pullback coming so that I can get them invested? I hear that every day, and I'm not sure at this time of year you're going to get much of a pullback. Now, you've heard all the statistics. Lower yields doesn't spur people out of money markets. But when you get lower yields and FOMO, right? We've now had 2 years of a bull market. That will spur money to come out. So I do think that if the Fed is on this path, and granted rates have gone up recently, but if they're on this path, I think that once we get through the election, we get into next year, I think that will cause people to push money into equities as much, in addition to other things as well. And that will continue the bull market, at least for the first part of next year. I am worried about kind of cap gains sunsetting second half, but I think that FOMO is still out there.
And certainly that next Fed meeting, just 2 days after that election. Morgan Stanley's Andrew Sliman, we thank you for joining us here today. And another story we're watching this morning, of course, is Boeing, because a big surprise to many investors, the labor strike continues after factory workers rejected the latest contract offer. It would have increased their wages by 35% over the next 4 years, and the strike is impacting production on a number of models for over a month. Joining us with more is Benedict Kamel, who leads Bloomberg's global aviation coverage. And let's talk about what's at stake now for Boeing, because a lot of investors really did underestimate this. They thought it was in the bag, but 64% had voted against. So what kind of hurdle does that create for Boeing?
Yeah, that's still a really sizable hurdle for the company. Now, if you look at this optimistically, you could say, well, 64 is a lot better than the 94 that we had in the first vote in September. So you have more people moving over to the other side, to the let's accept this side. But we're still somewhat off from the 50% acceptance that they really need. So for Boeing, it's back to the drawing board. They have to reconfigure their offer that's out there. You said it, 35% on the wages. They have a signing bonus, $7,000. They're putting some money into the retirement, and those are the areas that they'll need to work around. It's probably not so much on the wage side where the conflict resides. It's more on the pension and the retirement side. So that's the part that Boeing needs to take a hard look at. The workers want their old pension systems reinstated, and Boeing says that's not going to happen. That's our red line. But the real question is, how much movement can there be? How much elasticity is there in that red line? Because every week, every month, this strike drones on. It's going to cost them dearly. We heard from the CEO yesterday that essentially this year, in terms of cash, is a write-off. It's going to be a cash outflow year. And surprisingly, I think for a lot of people, the first half of next year will also be a cash out year. So those are some really bad numbers from Boeing and bad predictions.
So a precarious position for Boeing, and as you point out, I mean, the pension issue, there's still a lot of daylight between these two sides. Let's talk about the ripple effects here, because of course we are in the heart of earnings season. We heard from American earlier today, and their CEO saying that we need them to deliver quality aircraft on time. I look forward to the phone call when Boeing says we're able to do so. And I mean, it's been discussed before. You really only have two options, Airbus or Boeing. So they have a loyal customer base here. But I mean, these airlines have to be getting fed up.
You're absolutely right, and this is a huge issue that's across the industry, and every airline you speak to, they say, where are my planes, where are my new aircraft? I'm forced to either reduce some of the routes that I have, I'm forced to take some planes out, and that's causing huge disruption at a time when travel is still out there. Right now, Boeing is almost producing no planes. They are making 4 aircraft a month. This is one half of the duopoly making 4 planes a month, 1 a week, just to give you a sense of just how little they're producing. Airbus obviously have issues of their own, but they are at least producing, and this is something that over time, it's not going to happen overnight, but over time can really start tipping the scale between this duopoly and turn it more into 60-40, maybe even 70-30 type sort of balance, and that's something that Boeing really needs to watch very closely.
All right, looks like, you know, especially since they have about $60 billion in debt with the BBB- rating, they have to be pretty careful. Definitely fixed income investors to be careful there. Benny, thanks so much for joining us. Bloomberg's Benedict Campbell, he runs airline coverage for us globally, sitting in the London office today. Coming up, we're going to switch gears and talk Tesla. The stock is soaring after a blowout quarter. We'll take a look under the hood next. There's a frunk. There's a frunk in a Tesla. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in business are on Bloomberg.
The challenge for us now is not very much on the product, it's on the ramp-up of the production system.
We turned the industry down to almost zero during the pandemic. And what we're trying to do now is turn it all the way back on. And that's hard. We lost not only people during the pandemic, we lost a tremendous amount of experience.
A lot of skilled people have left the industry. We have to hire new people. The supply chain has to hire new resources and train the people, educate them.
And because those roles are filled now not by a 58-year-old, but perhaps by a 28-year-old, there's a lot we have to do in terms of not only adding capacity, but capability to meet the ramp that we all are embarked upon.
We have thousands of suppliers, and when you have just a couple of them, few of them that are late on the ramp-up, well, that's slowing down everybody, and that's what we've been facing earlier this year.
Nobody covers business like Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Tesla shares are soaring pre-market. The automaker's third quarter results blew past estimates and posted a strong forecast for 2025, as casual as it may have been. The results were lifted by the Cybertruck. It is now contributing to profit for the first time. It had been a losing proposition for the company. Joining us now is Vijay Rakesh, Mitsuo Securities Semiconductors and Automotive Tech Senior Analyst. He has a neutral rating on the stock with a $230 price target. And first off, Vijay, I think it's awesome that there's a semiconductors and automotive analyst in one job because, you know, increasingly you need thousands and thousands of chips in each of these vehicles. What do you think about Tesla's earnings?
Yeah, absolutely. Thanks for having me on, Matt. I think the confluence of semiconductors and automotive is very obvious across the spectrum. More and more we see semiconductors melding more into the automotive side. But I would say, looking at Tesla, very solid quarter here, especially on the profitability side. The margins were definitely a standout, up 200 bips sequentially. But the question would be, looking out, is how sustainable those margins are, because the CFO did say on the call that the margins at these levels might not be sustainable. They also have had a pretty good FSD contribution to the margins. Almost half of the pickup on margins were from the FSD side. So maybe that comes down going into the December quarter as well. So something to watch. But we think there could be some challenges going to December quarter here.
So want to know how much more juice there is in this stock, because if you take a look, the price this morning into the early trade was about 243. That is 71% higher than the lows of this year. And if you think that there could still be margin pressure ahead, is this move warranted or overdone?
Yeah, I think what we see is on the guide for the December quarter or for the full year, they're looking at now units flat year on year. That would imply a pretty significant pickup into the December quarter, almost like 12% sequential increase in deliveries. That's the biggest quarter that they've probably seen. So we think there could be some challenges there, given that the European Union is now looking at putting tariffs on Tesla imports from China. You have the Cybertruck deliveries now, where they're now giving a $20,000 promotion on the Cybertruck as well. So you're seeing some challenges as you go into Q4 with that. And looking out to 2025, as you were talking before, a pretty solid 20 to 30% increase in deliveries. That would be an incremental 500,000 units for next year, which could be, given that we still haven't seen what a low-cost EV from Tesla looks like, could have some investors scratching their heads. So.
Well, that's where I want to go, whether or not that 20 to 30% next year growth is realistic. Because you think about all the reasons why Tesla stock has had such a rough year. Of course, you have an unclear roadmap when it comes to those low-cost EVs. Elon Musk is clearly very dedicated to betting the house on autonomous vehicles. And then you have the fact that for all automakers, EV demand is slowing. And when you add that all together, does 20 to 30% sounds like something that Tesla can actually achieve here?
No, look, I think Elon Musk and Tesla have done an exemplary job. I think they have really shown how good profitability they can deliver on the EV side. But there are still challenges in terms of EV sales. And so we think 20 to 30 might be a slightly high bar, given that we still don't have an EV, what a profile of an EV, low-cost EV car looks like. And also, as you look at next year, there are still challenges with high EV penetration in the U.S. Still challenges with EV penetration in the U.S. And in Europe also, what we are seeing is year-to-date, EV sales are down 5% year-to-date, year-on-year, which is pretty significant. So I think that number could be a little bit challenging as you look at 2025.
I mean, I think they already have a low-cost EV, right? The Model Y, you can pick it up for 34 grand new. And if you just look for a 1-year-old with low miles, you're going to get down to the high 20s. So I can't believe they're going to be able to boost sales by 30% next year. That seems pretty punchy, VJ. What are the chances?
We'll see. I think at this point we have to take what Musk and Tesla is saying. So, depending on when they launch it, what the size of the launch is, what the price points are, the market definitely needs something in the $25,000 range. We don't have that out there yet. The bigger question beyond that is how profitable is it? Can they make it with sustaining the margins that they have here? We think that could be a little bit of a challenge as well.
Vijay, we thank you so much. Of course, it's a hot stock to watch today. That is Vijay Rakesh of Mizuho Securities. Now, coming up, not riding so high on the hog. Sorry, Matthew Miller. Harley Davidson selling fewer motorcycles. You got to get on it. Details up next in Social Climbers. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
right, it's time now for Social Climbers. The company's making waves this morning. And first up, McDonald's supplier Taylor Farms is recalling some yellow onion batches produced in a Colorado facility in response to that deadly E. coli outbreak at the fast food giant. Taylor Farms said it hasn't found traces of E. coli yet, but decided to pull back the products out of an abundance of caution. Next up, we have T-Mobile reporting third quarter results that beat expectations. It also raised its full year forecast for subscribers. T-Mobile was the only one of the big three telecom companies to beat analyst forecasts. It has also been more optimistic than its rivals about demand for the latest iPhone. And finally, we end with Harley-Davidson. It's cutting its full year revenue forecast thanks to lower overall demand and fewer sales of its higher margin bikes. The CEO blamed high interest rates along with broader uncertainty about the economy for the weak results, but said he was optimistic about a better 2025. Shares still down about 1.2%, Matt Miller. And I thought this was interesting solely because I like the ticker. It's HOG.
HOG, yeah, and it used to say oink on the on the trading page as well. You know, they're charging $45,000 for a CVO Road Glide, which is, to be fair, it's a lot of bike, but that's a pretty decent car for that price.
I was going to say, what kind of car would be comparable to that motorbike at that price?
I mean, it's an awesome motorcycle, so I think it's better than almost any car. But yeah, for 45 grand, you can buy
2 to 3 horses, pretty good ones
yes,
too.
Good horses,
Yeah.
and a lot of cowboy boots or handbags or whatever Shanali's focused on. Coming up, less than 4 minutes until the opening bell. We'll discuss the moves with Tracy McMillian of Wells Fargo Investment Institute. We could have a recovery today, folks. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
All All right, we could see a turnaround today after 2 down days. Wait, was it 3?
It was 3.
3 down days. Oh my goodness! And futures are up right now. 1/3% on the S&P. Nasdaq futures up 0.75%. Tesla really blowing away expectations, beating on margins, which I thought was a huge deal, and then saying next year maybe 20 to 30% sales growth. That's crazy talk. Here the opening bell on the New York Stock Exchange. You got Ingram Micro ringing the bell there, and it works today, which is great. Hoo-hoo Tech ringing the bell down on the NASDAQ. No idea what they do, but what an awesome name. In terms of where the indexes are moving in the first 20 seconds of trading, let's get over to Katie Greifeld, and she can tell us. Katie?
All right, 23 seconds in. We have green across the board. A very different picture from where we were just 24 hours ago. We had 3 days of losses on the S&P 500. Big tech has been relatively resilient, actually. Only 1 day of losses, and that was yesterday. Today, totally different story, and that's thanks to Tesla, which we'll get to in a second. But you can see big tech leading the way. Small caps, though, also putting up a fight here. The Russell 2000 up about 0.3%. But of course, the story is Tesla. Shares really surging after a strong earnings report and a forecast from Elon Musk, a casual forecast, 20 to 30% growth in vehicle sales next year. The Cybertruck contributing as well for the first time. Shares currently higher by about 14%, Shanali.
And Katie, not every story is an up arrow story. There certainly are a lot of them, but I'm keeping an eye here on IBM. Shares are down after earnings to the tune of about 6% nearly. Analysts are noting that weaknesses in the company's consulting and infrastructure businesses weighed on results. Matt, it's a bit of a bellwether here for business spend moving forward.
Yeah, absolutely. Based in Armonk, just a few short miles from me. The Boeing union, representing the 33,000 striking workers, rejected a new labor contract. It would have increased their wages by 35% over 4 years, but there's a sticking point in that they want defined benefit pensions as well. We also had a lot of airline earnings out, closely connected, obviously, the plane maker. Let's get the details of Bloomberg's Abigail Doolittle. Abby?
Well, we have a little bit of a mixed story here, or at least mixed market action for the shares of American Airlines versus Southwest Airlines. Americans up about 5.1%. They did boost their profit outlook despite higher costs, but they've really gone after a new strategy, let go of that old strategy around business travel, and they're aggressively going after the new strategy. Apparently, it's working. Southwest Airlines beat, but in terms of their guidance for the future quarter, it points to higher costs, so investors not liking that, sending those shares lower. Both of these airlines, relative to the amount of revenue that they're making per seat mile, you can see that prior to the pandemic, pretty steady in this midline range, and then around the pandemic, going down in a big way. In 2022 to early 2023, higher and now lower. So these airlines really trying to squeeze out that revenue per seat. Let's see whether or not they can get it back to the upside. Speaking of the pandemic, not surprisingly, these stocks still down over that time period or over the last 5 years. American Airlines, Southwest Airlines, and then the overall composite all down more than 20%. Lots of ground to still make back, Katie.
Abigail Doolittle, thank you. We should also mention UPS having a fantastic day. Of course, UPS rallying in a big way, jumping 10% at one point. That was the biggest one-day gain since February 2022, holding those gains now. Of course, UPS reporting that revenue beat forecasts for the first time in 2 years. Of course, this is a stock that needed it, down more than 13% year-to-date into yesterday's close. We'll unpack those results in about a half an hour or so. But let's discuss the broader market now with Tracy McMillian. She is Wells Fargo Investment Institute Head of Global Asset Allocation Strategy. Tracy, it's great to have you with us, of course, in the thick of earnings season with a lot more still to come here. It's early, but what do you make of the results so far? Because it's been really, hot and cold when it comes to these market reactions.
You're right, Katie. It has been hot and cold in terms of the reactions. And, we're expecting a fairly modest earnings season here. The consensus is around 3.4% earnings growth this quarter. It'll probably come in better than that. We usually do see better earnings than the consensus numbers. But what's most important is probably how companies are guiding. And if they're guiding up in this market, especially like some of the big companies that we've seen reporting recently, then that's telling investors that it is okay to continue to invest in a lot of these themes that have been driving the markets through 2024.
How much of the higher guidance, Tracy, is contingent on the Fed continuing to cut rates? I definitely saw Harley Davidson, Jochen Seitz, the CEO there, saying rates have been killing us. I'm paraphrasing. But we expect them to come down next year, and that could boost sales. Elon Musk saying maybe 20 to 30%, but it was a very casual mention. Doesn't seem like he's studied it that closely. I guess he could say he lives it. Do we need rates to come down substantially for this kind of earnings growth to continue?
You know, Matt, both of those companies that you mentioned are dependent on lower interest rates and dependent on credit. And so they probably are factoring in lower interest rates into 2025. And indeed, we do think that the Federal Reserve will cut rates by 50 basis points more this year, another 75 basis points next year. We do see the economy slowing down a bit, giving them the opportunity to cut rates. So that forecast is actually in alignment with what we're seeing right now. Should the economy stay stronger and the Fed doesn't cut rates as much, then those companies could still benefit because the economy is growing at a stronger clip than we're currently expecting.
When we think about the economy, you had the jobless claims this morning coming in better than expected. You're looking at these earnings. You're seeing UPS volumes looking better. You're seeing the airlines doing pretty well. And you have the consumer discretionary index still lagging the broader S&P 500, but really catching a bid in the market. Something just pointing out that's interesting today, you did not see the trade really follow through yet. You don't see the cruise lines up today, even with Royal Caribbean being your best performer in that index this year. At what point do you still get cautious here for that trade around the consumer? Do you think it's ready to take off in a bigger way?
So not necessarily. We continue to have consumer discretionary as a neutral weighting in our portfolios, and then those more defensive sectors as underweights in the portfolio. So we do think that what we're going to see going forward is more of a continuation of what we've seen. The upper fundamentals of the consumer continuing to do well, continuing to spend, companies continuing to spend around the AI build out of that infrastructure. And so that is what is probably going to propel the economy in 2025. And so we're focused more on the cyclical areas of the market. So, you know, think those types of businesses that are going to benefit from those conditions. So those are going to be energy, financial, industrial, and communication services.
Tracy, thanks so much for joining us. Unfortunately, we're having some technical difficulties here. You're breaking up a little bit. So we're going to try and get back in touch with you as soon as possible, get you back on the program. Tracy McMillian there from the Wells Fargo Investment Institute talking to us about these markets and a little bit of a comeback today. I mean, we had 3 down days in a row.
On the S&P.
On the S&P 5. You watch other indexes more closely?
The NASDAQ, I cast my eyes over there every once in a while.
Right. So what, tech was doing better than?
Tech managed to hold up the first 2 days of this week. Yesterday, obviously, was a big ouch. Today is a big win. We'll see if it holds, of course. We're already off those pre-market levels. It's too bad we were having technical problems with Tracy because I think it's an interesting question. I mean, are you playing defense in this market? Are you holding chips through the end of this year? Or where can you play offense right now? I mean, it seems like a lot of people here are happy to just hold on through the end of the year.
Yeah, to that end also, it's like, when do some of these trades that are still a little risky, when do they take off? You know, I was looking at some of the biggest movers in the S&P. Another one besides Tesla is Pool Corp. Pool makes stuff for, as you would imagine, your backyard pool.
And summer, right? I mean, it's really, it's time to close the pool right now if you haven't already.
Totally. And anyways,
has a lot of leaves in it.
Yeah.
It all goes to say that people are spending money, maybe not on Harley Davidsons right now, but elsewhere, Matt. Anyways, coming up, we're going to talk about Verizon. It is no longer a buy after lackluster earnings this week. More from today's top calls. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, it's time now for our top calls. Some of the analyst action in focus this morning, and we start with KeyBank, saying that Verizon is no longer a buy. It's downgrading the stock to neutral following the company's results. The analyst says there's little room for earnings acceleration next year. Next up, KGI Securities raising Tesla to a buy after that EV maker reported earnings that topped estimates. Of course, more good news for Tesla, shares up 16%. And finally, we have JP Morgan downgrading Avery Dennison, saying that the label maker is no longer a buy and cutting its price target by $20. That's after the company missed third quarter earnings estimates, Matt.
All right, so labels, I guess, aren't very popular right now. I'll try and do something about that afterward. Turning to the fall meeting of the World Bank Group and the IMF in D.C., Bloomberg's Lisa Abramowitz joins us, and she's got the governor of the Bank of Israel with us. With her, Lisa, take it off.
Thank you so much. I am here with Amir Yaron. He is the governor of the Bank of Israel, and he joins us here on set. Governor, thank you so much for being with us. I want to start with this idea that everyone here is talking about inflation and growth and trying not to talk about a U.S. election. But then, you know, there is sort of a question of how do you come up with ranges of estimates for growth, for inflation, when you're mired in a war?
Lisa, first, thank you for having me. First, maybe a little background before the war. Softish landing, high growth, inflation was coming to the target, low debt to GDP. Israel also has a good record of coming out of security events, part of our resiliency and dynamism of the economy. Now, when you build up forecast in a situation that is mired with uncertainties, you kind of have to come up with basic scenarios. Obviously, the war has gone longer than initially anticipated. Right now, our basic forecast and scenario is that the war will continue roughly until into the first quarter of 2025, with an intensity sort of like what we're seeing now for another month or so, and then slowly take a notch down. Now, the critical parameters when you do this, and that's what we've learned, is What is the intensity of fighting and the number of reserves? Is the educational system open or not? We saw that was critical at the first month in October when missiles were flying around. We see a little bit of that in the north part right now. And obviously areas where there's limited activity. Those are key parameters for growth. There's I gave you kind of the basic scenario. Of course, there are alternative scenarios where the war goes on for longer. There are alternative scenarios where there may be even more intense.
Well, how hard is it to attract foreign investment at a time when there is this range of outcomes that's very wide?
I would say one thing, given clearly this war is of different scope in terms of duration and its scope, and yet when you look at the Israeli economy, it is showing a lot of resiliency. First of all, our external position is extremely sound. Our current account is still growing. We are seeing the shekel being volatile between 3.6 and 3.8, primarily due to geopolitical events, but still, given the scope of events, it is very. I would say it's. Some people would have thought maybe it would be moving even more, and so that shows a lot of confidence. I would say people are buying houses. That is the most illiquid asset you could think of, and Israelis are buying houses. House prices have come back to go up. So those we're seeing exports. The high-tech sector, for example, we are seeing in Q2 and Q3. Some of the VC funding has gone up. The services, export services of the high-tech sector have in fact been coming up.
So at a certain point, you have to wonder if this goes on for longer than your baseline, there is the fear that some of that could start drying up. At what point does the economic concern factor into the political one of how long to go, how far to escalate?
I want to make the point that obviously a flourishing economy needs security, and that is essential. On the other hand, security needs a flourishing economy. They're intertwined. You know, we have basically now a committee that is looking into longer range investments of how much the security forces will need to expand in terms of budget. That is obviously the fiscal issues is something that we need to deal with as the cost of the war have gone up, debt has gone up, and in 2024 the budget, the government did do the appropriate things and did fiscal adjustment on the order of 1% of GDP. There's a 2025 budget that is coming up. We at the bank basically have said that we need to do additional fiscal adjustment given the extra cost of on the order of 1.5% of GDP. And that's how you basically, if you do those things, and that's very important they be done, you basically convey to the markets that you're continuing to be fiscally responsible, you maintain and strengthen your credibility towards the markets.
Does it create a more difficult scenario when the Israeli credit rating was downgraded, and there is this fear that the borrowing costs are going to start going up? How much could you see borrowing costs rising? Is that a problem for you as you've tried to figure out all these budgetary concerns?
So some of the numbers I had just given you incorporate already the higher borrowing cost scenarios whereby the cost of the war indeed go into Q1 25 and some extra expansion of long-term expansion of spending on security. Of course, if we end up with alternative scenarios where, and some of the borrowing costs have gone up, but they've been relatively stable. The institutional investment places in Israel, risk premium has come up, and the downgrades kind of at some point aligned closer to them. But in general, at least now we are seeing the government being able to fund its debt. You know, the costs are somewhat higher, but I don't see the market is deep, and we see the coverage ratios in these things are quite well. So I think the pertinent issue is to do these fiscal adjustment, maintain the credibility of the markets. If we can do also structural changes, those are big issues. For example, adding the taking out negative incentives to go to work by the ultra-Orthodox, drafting them, making sure we invest in infrastructure and education. Those are additional things that we would like to see happening with the fiscal adjustment and the budget.
Just 10 seconds. In other words, drafting Orthodox would be part of the fiscal adjustments that you think are necessary.
Well, I think there's one is an issue of equity and inequality, but clearly, you know, as we will need more reserves, we put estimates that if we have to go where the military is saying that reserve duty will have to be many more days than what they do now, the draftees will have to do 36 months instead of where they were going 28. That will cost Israel like 0.5% of GDP per year. So we need to increase basically the participation there.
Governor, too short a time. Thank you so much for being with us, Governor Yaron. And back to you, Matt.
Thank you.
Lisa, thanks very much. Lisa Abramos there with the Bank of Israel Governor. Amir Yaron, fascinating discussion saying they'll have to maybe draft the Orthodox there in order to make up for a shortfall of draftees. Also saying that the war has gone on longer than had been expected, and now they see it going until at least the first quarter of next year. Still, Israelis are buying houses and service exports are going up. So back here in the U.S., we've got a ton of earnings out this morning. We've been talking a lot about Tesla, obviously. Not too much about UPS.
Yeah.
They actually had really good earnings, but they've been doing so poorly.
I know. So the bar was low there. It is interesting that you're seeing FedEx shares get a little bit of a lift as well. FedEx shares up about 2%. UPS having its best day since, I think, February 2022. Southwest is fascinating, though, because they actually topped profit estimates. They also came to some sort of agreement with Elliott, but then you take a look at shares off by about 3%. Still some bad news in that report.
Fascinated by that agreement because they're giving up 6 board seats, but the CEO can keep his job for now. Anyways, we're going to turn now to the Wall Street Beat. We're going to talk about deals because that's another thing moving markets. Keurig Dr. Pepper will acquire Ghost for around $1 billion. Ghost sells energy drinks with flavors such as Sour Patch Kids and Warhead. That's pretty throwback, if you guys may remember those. Anyways, the Bloomberg's Liana Baker covers all things deal for us, leads the deals team out in the United States. Listen, 4% decline in Keurig shares, the biggest deal since they acquired Dr. Pepper. One thing that struck my eye about this was $1 billion in cash, cold hard cash.
But it is a two-step deal, so Dr. Pepper is going to pay, you know, a few $100 million or $990 million up front, but then over many years, then they'll pay out the rest. So there is some downside protection here for Keurig Dr. Pepper, and the founders have to stay on, and they have to meet certain targets by 2027. Should they reach, you know, this valuation by the time the deal's up in 2028.
By the way, I was just, so Sour Patch Kids and Warheads, those are kids' candy flavors, right? In a drink that has 200 milligrams of caffeine per can.
Seems like a natural fit there.
Is it right to market that kind of drink at little kids?
Yeah, you can really like inject the caffeine into the children. But let's talk about the beverage industry. We actually had the CFO of Coca-Cola on yesterday. We asked him, are you looking for deals? He said he's open to it. Interesting to see this news then hit. And Matt, you were pointing out there's just so many energy drinks out there. This feels like a space.
Rockstar, Monster, A-Shock, Celsius, Red Bull.
Coca-Cola. So Coca-Cola has a big stake in Monster, and Pepsi actually has a stake in Celsius. So there's really a land grab with all of these faster-growing energy drink in that category that, you know, the traditional beverage makers are going in and either buying them or taking stakes or partnerships.
So consumer deals, very interesting right now. Your team has been covering something else that has been absolutely fascinating. That is the desire of traditional way kind of companies to get more into technology. Want to point out this Siemens deal in talks to acquire a software group, Altair. This is a Michigan-based company looking to sell to a large German one, cross-border, more than $10 billion perhaps. What do we know?
So right now, the deal hasn't been announced yet, but we reported that Siemens is in advanced talks to buy Altair. the market cap right now of Altair is over 9 billion. So with a deal premium, you could see this over 10 billion. And Siemens for years has been trying to shift from their old line industrial business. They have bought software companies before. A few years ago, they bought something called Mentor Graphics, which actually competes a little bit with Altair. And we've just seen a lot, Siemens and its competitors looking at industrial software. This is how they modernize. This is not, you know, internet software, anything like that. It's really software that helps them on the manufacturing line and in their plants and how they optimize that. And maybe there is an AI angle that makes, you know, this trendy, but Altair makes more, you know, manufacturing hardcore software to keep things running.
Oh, the software thing is just hard for me to wrap my head around. Energy drinks is much easier.
Yeah, I know. You can feel and touch them.
There are literally hundreds of brands, and at some point...
But it's bigger money at play. It's about more than $10 billion.
There has to be more consolidation in this. I mean, Google AI tells me 500 new energy drinks were launched since 2006.
That's a lot. You can't imagine that all of them are going to survive. Liana, it's great to see you. Thank you. Of course, that is Liana Baker. A quick check on markets right now. Of course, we're still holding on to gains, but they're coming back a little bit, of course. You have the NASDAQ 100 still up by about 0.6%, 0.3 on the S&P 500. Coming up later, David Einhorn from Green Light Capital. That's at 11:30 a.m. Eastern.
We asked the live audience on X to submit a few requests for what they would like us to try out here. So I will take a couple of prompts. Okay, Bot Gaskar wants to know if GPT-4o is capable of real-time translation. Mark, you want to try this one?
Sure, yeah, let's do it.
All right.
Yeah.
I speak Italian, so we can just do English Italian.
Try to do English Italian. Sure, let's do it. Hey, ChatGPT, how are you?
I'm doing fantastic. Thanks for asking. How about you? How's your day going?
I'm doing great. So I would like you to function as a translator. I have a friend here who only speaks Italian, and I only speak English. And every time you hear English, I want you to translate it to Italian. And if you hear Italian, I want you to translate it back to English. Is that good?
Perfetto.
Mark, io mi chiedo se le balene potessero parlare, cosa ci direbbero?
Mike, she wonders if whales could talk, what would they tell us?
They might ask, how do we solve linear equations?
Potrebbero chiederci come risolviamo le equazioni lineari.
Sicuramente, sì.
Certainly, yes.
Great. Looks like it works.
All right. So the next one is from Burrito John 78, who asks, can you tell what you're feeling just by looking at your face? Barrett, you want to give this one a try?
Absolutely. Let's try it out. Hey, ChatGPT.
Hey there. What's up? How can I brighten your day today?
Okay, yeah, so I'm going to show you a selfie of what I look like, and then I'd like you to try to see what emotions I'm feeling based on how I'm looking.
Sounds like a fun challenge. Go ahead and show me that selfie, and I'll put my emotional detective hat on.
Okay, so here's me. So what kind of emotions do you think I'm feeling?
It seems like I'm looking at a picture of a wooden surface.
Oh, you know what? That was the thing I sent you before. Don't worry, I'm not actually a table. Okay, so take another look.
That makes more sense. There we go. It looks like you're feeling pretty happy and cheerful, with a big smile and maybe even a touch of excitement. Whatever's going on, it seems like you're in a great mood. Care to share the source of those good vibes?
Yeah, no, the reason I'm in a really good mood is because we were doing a presentation showcasing how useful and amazing you are.
Oh, stop it. You're making me blush.
Amazing. Well, that's it for today on live demos. as you can see, this just feels so magical, and that's wonderful. But we also want to remove some of the mysticism from the technology and bring it to you so you can try it for yourself. So over the next few weeks, we'll be rolling out these capabilities to everyone. Today has been very much focused on the free users and the new modalities and new products, but we also care a lot about the next frontier. So soon we'll be updating you on our progress towards the next big thing. And before we wrap up, I just want to thank the incredible OpenAI team, and also thanks to Jensen and the NVIDIA team for bringing us the most advanced GPUs to make this demo possible today. And thank you all very, very much for being a part of this today.
Next couple hours, I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So you can head over to youtube.com, search Bloomberg Podcast or Bloomberg Live Radio, and that's where you will find us. Coming up, we're going to break down a bunch of earnings coming across the tape here. A busy day, probably one of the busiest days of this season. We're going to talk to Drew Redding about the housing data that's about to cross the tape any moment now. George Ferguson's going to talk to us about what he's seeing from our good friends at Boeing. They did not resolve their strike last night, so they're still on strike, and that is a challenge for that company. And then Terry Quaj is going to join us. He's the founder and CEO of Luma Partners. He is one of the leading M&A bankers on Wall Street. He did all the big media deals back in the 90s and the 2000s. He's since pivoted. Now he's all over this digital advertising space. Think Google, Amazon, Facebook, all the big advertising platforms. He does a lot of work with folks in that sector. So we're going to talk digital advertising with Terry Quaj in studio. But right now, let's go to John Tucker and get a Bloomberg Business Flash.
All right, thanks, Paul and Nora. We are being brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on the 2024 elections. Just answer yes or no. Visit ibkr.com/forecast and get started today. We are data dependent, so let's start right there. We did used homes yesterday. New home sales, better than forecast, 738,000. That's on an annualized pace, so a pickup there. Of course, Drew's going to be along in a minute to break that down a little farther. Right now, as we look at the S&P 500, 6 of the 11 major industry groups, they are higher, being led higher by consumer discretionary. I don't even have to look. I think that's home to Tesla, right? Tesla shares up 16.6%, and we chalk that up to stellar earnings there. And we also talked earlier today to Dan Ives of Wedbush Securities. In addition to Tesla, he talked about the Magnificent Seven, a cohort of stocks. Reporting earnings season gets underway next week for the bulk of the Magnificent Seven, in addition to the results that we saw from Tesla today. Dan Ives at Wedbush Securities, he says he expects fireworks.
I mean, it is going to be a robust earnings season for tech. I think because you have an AI revolution being led by godfather of AI, Jensen, NVIDIA. It's something we haven't seen in 40 years. And now the next stage takes over.
United Parcel, this is kind of a barometer, we'll call it, for economic activity. That's jumping. They returned to sales and profit growth for the first time in about 2 years. And Boeing, you know the story there. Those shares, they continue to fall. And right now, as we look at the S&P 500, 18 points higher. That's up 0.3%, 58.16 on the index. The Dow Jones Industrial Average, that is down right now 80 points. That's down 0.2%. The NASDAQ 100 is up 148 points. That's up 0.75%. Yields will do that for you. 2-year is down just about 2 basis points, 4.05. The 10-year yield, that's 2 basis points lower, and that is at 4.22. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Nora and Paul.
All right, JT, thank you so much. We appreciate it. Norma Linda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming the video thing on YouTube. So head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. As John was just reporting, new home sales came in a little bit better than expected. Let's break it down with an expert. We can do that with Bloomberg Intelligence. They got everybody over there. Drew Redding. He's a Bloomberg Intelligence U.S. home building analyst. Drew, what did you make of these numbers here? The new
to see a flood of existing homes to come back on the market. How much competition do you think that would actually pose for home builders when we're thinking about new properties?
Yeah, that's a great question. Inventories are up about 20% compared to last year. At the national level, they're still down about 20% compared to pre-pandemic levels, but it's very market specific. You're seeing markets in Texas, Austin, Dallas, Houston, and San Antonio, as well as most of the markets across Florida, where inventories are rising, anywhere from 30 to 50% year over year. They're back above 2019 levels. So the competitive dynamic is certainly shifting for builders in those markets, particularly in Texas. And I think what you'll ultimately see is that builders are going to have to continue to lean on incentives. I think it could start to put some downward pressure on prices as we move forward. So if builders want to clear that spec home inventory that they've built up over the last year, they're going to have to keep their foot down on the gas pedal in terms of their use of sales incentives.
Hey, Drew, thanks for joining us. Really appreciate you hopping on there. Drew Redding, home building analyst, Bloomberg Intelligence from Princeton, New Jersey. A little bit better than expected new home sales, so we note that. Looking at the markets here, red and green on the screen, S&P and the NASDAQ higher, the Dow a little bit lower. Let's break it down what's happening in the markets this morning. Carmen Reineke joins us. She covers all the equities markets for Bloomberg News. She joins us here in our studio. Carmen, what are you looking at?
Yeah, so this morning, the first thing I'm looking at are shares of Boeing. It's down about 2.5% right now, ticker BA. What we're seeing here is that factory workers rejected a new labor contract that would have increased wages by 35% over 4 years. This is really just not great for the manufacturer. They're still dealing with a crippling work stoppage. It's hard to be making new planes when your workers are on strike. So shares really muted. This stock has lost 40% this year. It's on track for its worst annual performance since 2008. And of course, this means that the strike is ongoing and they're still in negotiations for a new labor contract.
I see you're also keeping an eye on Tesla. What's going on there? I saw some earnings come through that seem pretty positive.
Yeah, so Tesla is up 16% right now. Basically, the earnings were way better than expected, surprisingly strong. And I think what investors are really reacting to this morning is this forecast that vehicle sales will grow as much as 30% next year. That came from Musk on the call. He said 20% to 30%. Other notable things, the Cybertruck generated profit for the first time. The company also benefited from lower material costs, an expanding energy business, and sales of regulatory credits. So it was the best quarterly earnings in more than a year for Tesla. And this jump might just bring them into positive territory on the year. The stock has been all over the place. So thought that was an interesting line.
We had Dan Ives, the permabull, on from Wedbush Securities, and he was definitely singing the praises of Elon Musk and Tesla. And, it's a combination. This story is, yes, it's electric vehicles, but it's also there's an AI play to it. There's the robo-taxi, all these other things that I think Elon Musk, the bears would say he's just trying to distract you from the difficulties of actually making cars. The bulls would say, nah, this is just a multifaceted story here. You got to believe. And you got to believe has always been part of the Tesla story. You got to believe in Elon Musk.
Exactly. I mean, he has quite the following.
Absolutely. And deservedly so. He's created a tremendous amount of shareholder value over the years. Anything else there, Carmen?
Yep. So the last thing I'm looking at today is UPS, ticker UPS. Shares are up about 4.7%. The company returned to sales and profit growth for the first time in nearly 2 years. They benefited from higher volumes, more profitable packages, and steadying labor costs. Wall Street's happy about these results. Citi called it a relief rally and said that they were overall better than expected. So,
all right. Good stuff for United Parcel Service. I just parked my car in UPS and FedEx are kind of close to each other, my little strip mall where I go to. Whatever parking spot is closer to UPS or FedEx, that's where I go. No brand loyalty.
Yeah, real loyal customer.
Clearly no brand loyalty at all.
No brand loyalty whatsoever. Carmen Reineke, thank you so much. We appreciate Carmen Reineke. She covers the equities for Bloomberg News. Hey, folks, what would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. All you have to do is visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partner Material. Fill it out now at youtube.com/Bloomberg Podcast. As Carmen was mentioning, another disappointing data point for Boeing. The rank and file of the machinists out there in the Pacific Northwest did not ratify the deal that its leaders had brought to it, so the strike goes on. George Ferguson joins us here, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. I know, George, I was kind of surprised. I kind of thought the 35% bump in comp plus the 401k stuff plus everything else they were giving them would have been enough. Apparently it wasn't. Where do we stand now?
Yes, so did I, and you got me to tell you that yesterday, so now I'm in trouble. But, well, I'd say first, clearly there's no honeymoon period for Kelly Ortberg. Union doesn't care. Union's focused on, you know, getting what they think they deserve here after years of not getting what they think they deserve. I think, you know, Boeing's got to come to the capital markets. They got to raise a bunch of cash. I think more than maybe they initially, you know, had thought. I bet you they get up there in the 20+ billion range, because I think now Kelly's got to stare across the table at the union and say, we're ready to go the distance. They got $3.5 billion coming due in debt May next year, so that's a distance away. But yesterday we learned they're not going to generate cash in the first half. It's a burn in the first half of next year. So I think they got to start thinking about that maturity as well. Then they got to go figure out what they're willing to give the union. I mean, the real huge challenge here again is you got to get them back to the factory floor, like I've said, and they've got to be happy and make good airplanes because their work comes out in the final product. You know, their work is important to the final product. So, but again, I think it's a capital raise coming next.
I've read some reporting, George, that this defined benefit pension plan is a sticking point. I'm 60 years old. I don't know anybody who has a pension plan. Are they serious? This is the 21st century. Is that still a real sticking point?
I mean, apparently they are, because I heard that, you know, they rejected this at a 60% rate. So apparently they are. But I agree with you. I don't know how U.S. corporations can go back to a pension, defined benefit. And I got to believe, again, that there's some level of money you can give them in the 401k or in their raise. And maybe they just felt like everything came up a little bit short, and Boeing has to go figure out where to plus them up to 40%, give them a little more 401k, and see if you can't get them back with a smile.
So let's actually broaden this out a little bit. Just how important are unions for Boeing and the broader industrial industry?
Well, so I think unions are more important to Boeing than they are to the broader industry, right? Because I've made the case, the problem here is, one, it's 33,000 of them, right? So you can't possibly, you know, hire away from the union and start production anytime soon. And this is a very skilled workforce, because this is not as automated as an auto plant or something like that. So you need people that understand their job, right? The fact that it's aviation and the FAA oversees it and cares about quality, and quality is so important to the safety of the industry, that puts Boeing even in a tougher position, right? And so I think in this industry, unions are extremely important, especially to the most important airplane of Boeing, the 737.
And it's not just the Boeing plants themselves. I envision, when I think about a Boeing plant out in the Pacific Northwest, one with outside the gate a bunch of trucks lined up with all kinds of component parts that go into the assembly of these airliners. What are you hearing from just the general aerospace aviation supply chain here? There's got to be huge disruptions.
It is, right? And so what I'm hearing is the smaller suppliers, they live, you know, more hand to mouth. They can't afford not to be selling their product into Boeing. Boeing's keeping them hot, as they say. They've got them building product and sending it into Boeing. Some of the bigger suppliers, Boeing, you know, is saying, hey, don't bother sending your products. We'll catch up later. I guess I worry in the smaller ones. There's more of a financial impact from a strike. If Boeing has to slow them down for cash needs, that could have a bad effect on their finances. Some of those folks, you know, the machine shops, small manufacturing businesses, they're probably looking for other opportunities, you know, away from Boeing, because they hate going through these up and down cycles. They've been doing it since, 2018, right, after the crashes. So that runs the risk of seriously hurting the supply chain, because it's a smaller supply chain. So it's really it's a rough situation.
So equity investors, they've lost 41% of their earnings this year. So what are people thinking about? What are investors talking about that they're looking for as we're approaching year end? What type of turnaround? What are actual expectations here?
Yeah, I think any thought of a turnaround this year, it's shot, right?
Mm-hmm.
So all of your increase in production, getting up the levels that are going to create profitability and cash flow, that's pushed into the back half of 2025. So it's a really long runway right now, pardon the pun.
George,
go ahead, sorry.
Real quick, George, like 30 seconds. Is there any renewed sense of timetable now in terms of getting it?
I've heard nothing this morning, but again, I think Boeing goes for a capital raise, and then I think the union needs a little more time to think about it before they get back to the table. So I think you've got, I don't know, I think a couple of weeks before you're back at something again. So
all right,
we'll
George.
see.
We know where to find you, and we'll be touching base with you as we kind of move along here. But again, you could argue the stakes for both sides are really. If I haven't gotten a paycheck in a month, that's got to start to hurt.
Right, and who needs to budge?
Yeah, exactly. It's a negotiation. What you always hear is that a good negotiation is one where neither side is happy. I think that's kind of where we might
compromise.
George Ferguson, he's the senior aerospace, defense, and airlines analyst for Bloomberg Intelligence, and so we'll keep on top of that. Boeing stock off again today, a couple of percent off, 40%, as Nora was noting on a year-to-date basis, and it doesn't appear like anybody's looking to kind of step in and call the bottom here. So we'll stay on top of this, of course. Looking at the markets, a little bit of red and green on the screen. Coming up, Terry Kwaja, founder and CEO of Luma Partners. That's the investment bank that really caters to the technology sector, particularly the advertising technology sector, the companies that power the Googles, the Facebooks, the Amazons, the Snapchats, all those big social media companies that sell a lot of advertising. The technology comes from some really smart people in Silicon Valley and other parts. We'll talk about that coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 on track to break the three-day decline. Tesla leading the way with a gain of over 16%. The EV maker reporting better profit for the latest quarter than analysts expected. And a pretty optimistic CEO, Elon Musk, predicting 20 to 30% sales growth next year. Though the revenue for the latest quarter, that did fall short of analyst forecasts. UPS jumping after likewise topping analyst forecasts for profit. The company's finances can offer a window into the strength of the economy, kind of a bellwether because of how many different types of customers it serves. The revenue edged past expectations. Let's head up to Armonk, New York. IBM falling, reporting revenue for the latest quarter that fell short of expectations. The single biggest reason why the Dow is lagging behind the other indexes right now. Among the other data, we heard about new home starts, new homes sales rather. Fewer workers applying for unemployment benefits last week. That could be a signal of relatively low layoffs, but it also said the total number of those collecting benefits rose to the highest level in almost 3 years. The S&P 500, 10 points higher, that's up 0.2%, 5808 on the index. The Dow Jones Industrial Average down 131 points, and the Nasdaq 100 right now up 119 points, and that is a rise of 0.6%. Two-year yield, 1 basis point lower, 4.06. The 10-year yield, a basis point lower, that's at 4.23. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Nora and Paul.
All right, JT, thank you so much. We appreciate it. Nora Melinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. That's the internet, John.
Go check us out.
I've heard of that.
Okay, youtube.com, search Bloomberg Podcast. That's where you find us. All right, when I started in the media business on Wall Street 35 years ago, my clients were radio companies, TV companies, magazine companies, newspaper companies. Then along came cable television, and then this thing, the internet, came
The new age.
which upended everything. Our next guest was the M&A banker for the old media, and now he's the lead M&A banker for the new media. Terry Kawaja joins us. He's the founder and CEO of Luma Partners. I worked with Terry moons ago back on Wall Street when we were banking some of those older media companies. Now it's all about Google, Facebook, Snapchat, all these kinds. Amazon now a major player in digital advertising. Terry, thanks so much for joining us here in our studio. You are in the biggest, best industry I can think of. I mean, digital advertising, it has exploded over the last 10 to 15 years. You bank the companies that support the technology of all those big media companies that we like Google and Facebook. Talk to us about the state of digital advertising today. Is it as strong as it's been over the last several years?
Yeah, look, first of all, you're absolutely right to denote that, this is massive. We're talking about $1 trillion of spend globally. And what's interesting about it is that the vast majority of that spend is actually, those ads are bought programmatically, and all that's just a fancy word meaning auction, bought in auctions. And so there's a lot of technology that requires sort of real-time assessment and targeting of each particular ad slot that happens in milliseconds. So the technology has completely moved to this sort of software intermediated world. From a business model standpoint, the giants that you mentioned, they're somewhere in the 90+% of their revenue comes from advertising. Not everyone can be Bloomberg, right? But it's beyond just those large platforms. So media and historically subscription-based media, like a Bloomberg, but also like a Netflix and like a Disney that had these sort of B2B models in the old TV world that you and I covered well decades ago. They're all now shifting to advertising in order to garner larger audiences and supplement their revenues.
I mean, obviously this is an ever-evolving space. It seems like there's something new every single day. How do you all stay nimble?
You're absolutely right, Nora. In fact, I describe this sector as having 5 attributes. Scale, I mentioned $1 trillion, right? Growth, so if you looked at the compound annual growth rate of digital advertising, it's over 20% for 20 years. Name another industry that has that characteristic of growth. I'll wait. There is none. It has fragmentation. There are thousands of companies across this ecosystem that either offer services, media, data, software. It's very, very complex. That's the fourth item. Tremendous amount of complexity. And fifth, what you mentioned, Nora, it's dynamic. It just keeps changing. If you don't like it, wait 3 months, it'll be different. Either there will be a new technology, or there'll be a new media channel, witness, TikTok, vertical video, short form video, or there'll be a new technology policy, Google with, removing cookies, which is their sort of identifier, or there could be new regulation. And we're seeing a virulent antitrust and privacy legislation from both the US government and Europe.
That's kind of where I wanted to go. Terry and his firm, Luma Partners, they host these leading conferences where all these tech people come together, and I go to these conferences and I don't know anyone. I don't know any company, but I just step back and I say, collectively, these are the people that put all the ads on the Googles, the Facebook. They figure it out. That's how I think about it. Talk to us about M&A in your business, because it's comprised of, in the advertising technology space that supports all the digital advertising that we all experience every day. A lot of M&A, and that's where you fit. Talk to us about how that activity's been over the last several years.
So first of all, you're right. With your non-recognition of these people that are really driving the internet. I mean, think about it, right? Who gets the headlines? Rupert Murdoch, David Zaslav.
Right.
Sorry, great guys, meaningless in terms of their power and influence over how this all gets made. The real people are these people that we don't even know. Doing sort of B2B
but you know them.
Advertising technology. Certainly do. This sector has gone through a wave of new company formation, and there's always new innovation, so there's always new companies, but it's direly in need of consolidation. That's where I identified this as an opportunity 14 years ago when I formed Luma, and it's completely manifested and has a lot more to go. Lately, the last 18 months, or 18 of the last 24 months, we saw a huge slowdown in M&A activity, a 10-year low, because, the economy, all these macro uncertainties, people weren't sure what was going to happen with interest rates, with inflation, and so basically everyone cut costs, improved their profitability in 22 and 23, in anticipation for a recession that never came. I swear to God, if we get to the end of 24 and there's not a recession, Jerome Powell deserves to be on the $20 bill. I mean, what an incredible job. And so now everyone is like, wait, we haven't done M&A for a couple years. We direly need new technologies and new markets to enter. And by the way, we've got our EBITDA in a great place right now, and we can't, and the ad market continues to grow. So not only is there not a recession, digital ad spend is growing 14% this year. Now I'm talking about, is the $1 trillion industry growing at 14%? Right. Those are large numbers. So every year it forms like an industry size of growth. And next year forecasted to grow 12%. So turns out you can't cut your way to growth. And so they're back on the bandwagon, and strategic M&A is coming back.
The biggest platforms, as you mentioned before, the Facebooks, the Googles, the Amazons of the world, boy, it feels like Washington has really got the regulatory sites trained upon them. How does that impact kind of everybody else in the industry?
Excellent question. Here is my problem with the DOJ and the FTC. So Jonathan and Lena, they're well-intended policies to curb big tech. No one would argue with that. Big tech, look, come on, man. These companies have enormous power. So by all means, rein them in. However, the effect of the well-intended legislation was to put a pall on all M&A activity. I mean, when they blocked the Simon & Schuster deal, it's like, sorry, 1977 called and they want their antitrust legislation back. So it's totally ludicrous. They've, I think, overstepped. And the net result is, if you've got a half a dozen companies that are omni-powerful, like Amazon, Google, Facebook, it's companies numbered 7 through 50 that you need to be doing M&A in order to compete with the top 6, and now they're foreclosed from doing so. And so actually it's had the opposite effect. It's actually increased monopoly power.
So let's talk AI. I mean, not that big of a deal, but I'm curious, how does it actually impact your business? Of course, that is something that everyone's been watching in terms of AI and how obviously it trickles into social media and how we think about the internet and things of that nature. And I'm sure it's very, very critical to digital ad sector.
Yeah. So I put AI in the category of shiny new objects, right? I mean, and marketing loves the shiny new object. People in this industry went crazy for, oh my God, 5G, Web3, NFTs. And, you know, I feel there's a responsibility as someone who understands what's going on here to call balls and strikes. So I said, this is nonsense. This is bunk. You're wasting your dollars. By all means, marketers, spend in those categories for experimental purposes to look cool and speak at conferences. But you just know that you're lighting all of that money on fire. Now, AI, there's a lot of hype around AI. So wait, are we saying this is yet another shiny new object? I believe this is one where there's both hype and reality. In fact, one could make the argument that digital advertising and media is the perfect application for AI, because these are large language models that do a lot of interesting things, but they need huge amounts of data. Well, there is no industry with more data in terms of real-time bidded trillions of ad calls daily in real time. It's the perfect application for AI. And we're going to see a spectrum from evolution to revolution. I put them in 3 buckets. There's, of course, they're going to improve efficiency in and around media, data, and workflow around how all this stuff works, because it's complex, and AI will improve that. Then there's another category around generative AI that's going to improve content and the creative of the ads so that they become more effective, not just more efficient, but more effective. And then there's a third category of who knows. It could fundamentally change navigation on the web. What do I mean by that? It's going to change search, because search is where you ask questions, whereas AI gives you answers, right? Why do we need to manually navigate to websites if the publisher can simply publish to the LLM, because the interface isn't going to be manual navigation to a www dot, it's just, you're just going to ask your AI and AI will give you the answer. So the whole digital media world from a publisher standpoint could be going from B2C to B2B. And where the B2B, the last B on B2B is in fact the LLMs of the AI.
You haven't lost your energy, dude.
Oh,
no.
Hell no, I'm just getting started.
I told these people, when this guy comes in, you're gonna know. Terry Quadra, thank you so much for joining us. Terry Quadra, he's the founder and CEO of Luma Partners, really focusing on the digital advertising market, all the companies that kind of fuel the global digital advertising. And what's digital advertising? It's all the ads that come on your Facebook feed, your Google search, Snapchat, all that kind of stuff. Somebody's responsible for that, and Terry is certainly one of them, the investment banker to the tech world, getting an upbeat view of digital advertising, artificial intelligence, a big player. If you're an advertiser, you want to make sure that your ad message gets to the right person, the right customer or potential customer, and AI can certainly help in that. So we'll keep an eye on that. So we appreciate getting a few minutes of Terry's presence here in our New York studio. S&P 500 right now up 18 points, the Dow down 74, the NASDAQ up 116, so the market doesn't know what to do. 10-year Treasury, you can sit in 10-year Treasury and get 4.21%. That's not too bad. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks rising for the first time this week with traders going over a slew of corporate results, and big tech leading the gains in equities as Tesla surge. Tesla, most actively traded stock right now. It is up 14.5%. Shares of Tesla after that bang-up earnings report that we got. And Fed policy, that's still being mulled after a jumbo rate cut. George Concalves at MUFG Securities says, you know what, the Fed isn't done just yet.
The Fed has to still cut rates, regardless of who ends up, become the next president. But we're going to see, much lower rates because the Fed is still restrictive.
Meantime, 6 of the 11 major industry groups in the S&P 500, they are higher right now. And, of course, consumer discretionary, that's in the lead. Again, that's home to Tesla. Let me just give you the update. The Tesla shares 17% higher. I think I said 14. Right now, the best performing stock in the S&P 500, that belongs to Molina Healthcare, a 23% pop there. And the worst performing stock in the S&P 500, that belongs to Newmont Corporation. That is down over 8%. Overall, the S&P 500 up 16 points, a rise of 0.3% at 5814 on the index. The Dow Jones Industrial Average is 93 points lower. That's down 0.2%. The Nasdaq 100 up 148 points. That is up 0.75%. A 2-year yield right now, 3 basis points lower, 4.04%. The benchmark, the 10-year, that's down 4 basis points. That is at 4.20. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Nora and Paul.
Hey, John Tucker, thank you so much. We appreciate that. Nora, Melinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. Earlier today on surveillance, we had Dan Ives from Wedbush Securities on doing a little victory lap on his bullish Tesla call. The stock's up 17% today, the most since March of 2021 on the back of some pretty darn good earnings numbers. Let's break it down to Craig Trudell. He's a global autos editor for Bloomberg News. Joins us from Zoom, from London, on Zoom, on that technology there. Hey, Craig, what stood out to you? Why do you think the stock is up 17% today? What did you see out of the earnings release?
I mean, it was really it's really quite a combination because oftentimes it feels like it's not necessarily the case that you can count on both earnings and the vision to be positive. In this case, they both were working in Musk's favor. I think the earnings were much better than expected. I do think that those expectations came down quite a bit over the last year and a half. But they sort of they did exceed expectations by pretty significant measures, and the profit margins in particular are something that everybody keeps a very close eye on. Their automotive profit margins, when you back out the credits that they sell to other automakers for regulatory purposes, those in particular, I feel like are just quarter in and quarter out what everybody looks at. That was a big beat, and then I think Musk was as self-assured as I've ever heard. He's never one lacking in confidence, and for him to throw out 20 to 30% sales increase for next year, I think was very surprising to people after we're 9-10 months into the year, and they've delivered fewer vehicles in 2024 than they did in 2023.
Hey, Craig, so when I'm walking around New York City, every so often, I will see, to my surprise, a Cybertruck. What is the latest on that? What did they say in earnings? What can we expect there?
Yeah, they said that it was gross margin positive for the first time in the most recent quarter. And so we're roughly a year into the launch of that vehicle. So I would say that's a little on the early side, just relative to how Tesla has sort of done with new vehicle launches in the past. So that is another positive. I think in terms of volume, it's still quite low relative to the Model Y and the Model 3. That is still where you see the vast majority of Tesla's deliveries. so much so that Tesla has even yet to break out that vehicle in terms of quarterly results. And so I think we have a rough idea of how many they've sold, ironically based on the recalls that the company has had to do with the vehicle. It's as of the latest recall which was just a few weeks ago, it was around 27,000 units, I believe. So that's pretty small for a company that may sell somewhere in around 1.8 million vehicles this year.
Where is the focus from the company here in terms of it seems like they have a lot of balls in the air. Obviously, the car business itself, robo-taxis, artificial intelligence. What do you think they really want you to focus on? What does Elon want investors to focus on, do you think?
I think that's actually really one of the most interesting things here, and I think Liam Denning's column for Bloomberg Opinion this morning, does a great job of laying out this idea that, Musk's emphasis has really been on, don't bother with the here and now, forget the near-term earnings. The sort of big potential for this company has to do with, selling self-driving cars and humanoid robots and things that we've heard Elon talk about time and time again, but not actually deliver. And I think if you're sort of looking at this company sort of glass half full, I'm less concerned than I am today about the here and now of this company and the earnings power of Tesla and its current business, and therefore more encouraged that they have the ability and the time and the financial wherewithal to go out and pursue those big stretch goals that Musk has set for the company, and depending on who you ask, may or may not be able to actually follow through on his various predictions.
Well, from an equity perspective, this stock has been all over the place this year. I mean, we were just looking earlier, and year to date, the stock was in the red. Now it seems as though today's gains have pushed it to drift about 0.8% higher for the year. What's the bull case here? What are people saying? How much legs do they have to run? Can the stock go much further? What's the consensus there?
You're absolutely right. I mean, back in April, this was a stock that was down 43% for the year, and so for them to have come all the way back, it sold off quite a bit. After the robo-taxi unveiling just a few weeks ago, and we've now seen the shares go positive again for the year. We'll see if they stay in positive territory. I think whether or not the company can actually grow next year with deliveries, I think is really important, because even Musk, who's sort of perpetually said next year will be our year for autonomy, even he is saying that this Cybercat that they showed a couple weeks ago isn't going to be ready in 2026, and so we need this company to bring more affordable vehicles to market, to make Teslas more accessible to more consumers, and get back to when it's growing again, to put it simply. Right. And I think it's still unclear what exactly they have to offer that's going to help them get there.
Craig, thanks so much for joining us. Really appreciate getting some of your time and perspective. Craig Trudell, he's a global autos editor for Bloomberg News. He's based in London, joining us via that Zoom thing. I think for me, and I think for a lot of investors, and a lot of people that just think about the EV business, what is the ultimate demand out there for EVs? We had the early adopters go. We've had the people that just love the technology. They've bought their EVs. Now it's about, okay, now I got to service the rest of the people. The people that want value, the people, they may want cool designs.
Get the rest of us on board?
Yeah, so I'm just not sure how that plays out. We've seen some of the existing auto manufacturers like the Volkswagens and Fords kind of pull back a little bit.
Exactly. They started to pull back on their development there because they weren't really seeing demand, as you just mentioned. So I think it's really interesting when we think about the broader landscape and whether or not they're actually going to be able to attract the broader group.
Yeah. You got that whole thing about the charging network. You got to, a lot of people I talk to say, when the charging network is like the gasoline station network in this country, that's when I'll think about an EV. I don't know how that all plays out, but great day for Tesla and its shareholders, and Elon Musk, stock up 17% on the back of better than expected results and outlook. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Norma Linda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming video live on, what is that, YouTube? That's the internet.
That thing, the internet.
YouTube.com, so just head over there and search Bloomberg Podcast. Bloomberg News, Morning Consult. We got a poll out this morning. I'm just going to guess dead heat. Jody Schneider joins us, political news director for Bloomberg Television and Radio. She joined us in Washington, D.C. Jody, what did we learn from the latest Bloomberg Morning Consult poll?
Well, it reconfirms, Paul, that things are just very, very close. Probably couldn't get any closer. It is that dead heat. We've seen some of that during this last year or so of the polls we've done with Morning Consult, but this one is as close as ever. And of course, it's the last one before the election, so it matters as much as ever. We're really seeing, it's up maybe a point or half a point in particular states, but it's 49-49 when you get to all the swing states. And we are focused on those swing states, the ones where they are going to determine who wins the Electoral College, which is who wins the presidency.
Definitely. And Jody, as you just said, we are really coming up less than 2 weeks away from the election. What are you seeing from those swing states? What has really been the general consensus of this latest chapter?
Yeah, I think the poll really reflects that it is so close that almost, too close to call in a number of states. There's some talk about, well, one or the other may win the popular vote, but that is, almost beside the point. It is those swing states where in the past somebody has won by 20,000 votes or 40,000 votes. Hillary Clinton lost the blue wall states of Michigan, Wisconsin, and Pennsylvania by fewer than 80,000 votes in 2016. So it really is kind of, down to that so-called knife's edge in the final days of the campaign. And that's why you see the candidates and their running mates almost exclusively focusing on those 7 swing states, and the Democratic candidate so much on those blue wall states. She really needs to win there.
Jody, what do your sources tell you about the timing of when we may have some resolution on the actual vote itself? Will we know 11 p.m. on November 5th, or will it be hours later, days later?
Yeah, that's the question everybody I know is asking me. So that's what everybody wants to know. When are we going to know? And we may well not know that night. Not only the presidential, but the House of Representatives. The House is going to be a close race for control of the House, and it's going to go through New York and California. So we may not know that night who will control the House. We'll probably know the Senate. The presidential, we may not know. In 2020, of course, we didn't find out till Saturday. But you might recall 2000, where we didn't know until December when it went to the Supreme Court. So we may be in a situation like that, and the markets may not wake up to that uncertainty until it starts happening as well, which will be something else for us to cover here at Bloomberg.
How exactly are the candidates strategizing in this last stretch to mobilize voters?
Yeah, so they're really going to those swing states, trying to really make their case, their so-called closing arguments. Kamala Harris is trying to do that and we heard her at a CNN town hall doing this last night, sort of saying, I am, I have a plan for the future, but I have experience with, I've been the vice president for the past 4 years, and Donald Trump will be a danger to America. That's her case. Donald Trump's case has been to kind of double down on his rhetoric of making people feel that this administration has failed them. That's just, he's done it on the economy, and he's been successful on the economy, including it shows in our poll that he is the one people trust more on the economy, and he's making the case that to leave this with her would be a danger to the future of this country. So they're both making arguments based somewhat more on that their opponent would do harmful things to the future of America than as much on their record. Their closing arguments are kind of mirror images of themselves in some ways.
Jody, turnout, I've been told by the experts, is really, really important here. What do we expect turnout to be? And number two, does either party have an advantage in driving turnout?
Yeah, so I think turnout is key. It's certainly key in those swing states. The other interesting fact, Paul, to add in all this is early voting. We're seeing massive early voting. I think it's as much as 18 million or more people have already voted either by mail or in person, and we will be seeing a massive amount of that in the next week, historic amounts of early voting. Now, in the past, people said early voting tended to favor Democrats, but now the Republicans are pushing it as well, and it's becoming more the fabric of people thinking, well, why should I wait? Why should I wait till Election Day? So some of these closing arguments really might be falling on so-called deaf ears because people have already voted. And we'll see when we do the historical analysis of this campaign how early voting played into it.
With about 30 seconds or less, just how important is age in this election? Is that playing a factor at all?
It's playing a factor, but more gender seems to be. It really does seem to be a very gender-focused election. The Democrats, winning more women, and Donald Trump kind of doubling down on the male vote, both older and younger. But it really, gender seems to be the dividing line here more than age.
Jody, thank you so much for joining us. Really appreciate your reporting. As always, Jody Schneider. She's political news director for Bloomberg Television and Radio. She joins us from our newsroom in Washington, D.C. Looking at the markets, kind of, again, mixed red and green on the screen. We'll check in with Abigail Doolittle at the top of the hour and get the latest on what's happening in the markets. Coming up, Jessica Kriegel is going to join us. She's a chief scientist of workplace culture, and the firm's called Culture Partners. And we'll talk to her about Boeing. Boeing workers spurn the latest offer as bid to end strike fails. So the question is, what do these Boeing workers want? What can maybe Boeing give them to satisfy kind of what they need? And how important is it to get these folks back to work and back to work with a positive attitude as they need to get those lines moving? That's coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, a lot to go. We've got the markets kind of mixed out there. We'll break it all down with Abigail Doolittle in just a moment. Jessica Kriegel, chief scientist of workplace culture, is going to talk to us about the strike at Boeing. What do both sides want? What do they need to get back to work? Philip Richards, Bloomberg Intelligence senior analyst for European banks, can talk to us about Barclays Bank, trying to get a turnaround going there at the big UK bank, and we'll kind of get a sense of what he is expecting from some of these European banks as they begin to report. And then at the bottom of the hour, we're going to have a simulcast with Bloomberg Television. David Einhorn, Greenlight Capital. He's the founder over there. He speaks with Bloomberg's TV anchor, Shonali Basak. So we'll bring that to you at the bottom of the hour, around 11:30. So a lot coming up here, and let's kick this 11 o'clock hour off with Mr. Charlie.
All right, thank you very much, Paul Sweeney. Lots going on, and we've got you covered. We're brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Right now, looking at a decidedly mixed market. IBM weighing on the Dow. Dow Industrials down 129 right now, down 0.3%, but the S&P heading the other direction, up 8, up by about 0.1%. Nasdaq surging 0.5%, up 86 points right now. Nasdaq 100 index up 0.5%, and the Russell 2000 up by about 0.3%. Stocks, by the way, higher for the first time this week as traders sift through a number of corporate reports. The 10-year 4.19%, the 2-year 4.04%, spot gold up $18 the ounce, up 0.7%, and West Texas Intermediate crude down 0.8%, $70.13 a barrel. Our Abigail Doolittle will have a whole lot more on the markets for you coming up in just a moment. Cannot ignore that move in Tesla, up now by 17.3%. The car maker reported surprisingly strong earnings. It also forecast as much as 30% growth in vehicle sales next year. Indeed, a big move, as I mentioned, up 17%. Dan Ives is a senior analyst at Wedbush Securities.
this is Tesla getting their footing back, right? I mean, you know, you see a lot of negativity, obviously, coming out of Robotaxi Day. It's been a tough year. I think you're seeing a resurgence now. This is sort of the second chapter of this growth story playing out.
Dan Ives of Wedbush, again, Tesla shares up by 17.4%. He does have an outperform rating on the stock. Briefly, Boeing factory workers rejected a new labor contract that would have increased their wages by 35% over 4 years. Boeing down 1.2%. And we'll have a lot more on Boeing coming up for you this hour. Recapping, S&P up 8, up now by just about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Norma Linda, she's sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well, which raises a question. What would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. Visit youtube.com/Bloomberg Podcast and click on the link in our profile or community section to take the survey, which is hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcast. Red and green on the screen as Charlie was just reporting. The Dow off 150 points. About 100 points of that is from IBM with their weaker than expected results. Let's check in with Abigail Doolittle. She covers all the stocks for Bloomberg Television. Abigail, what are you looking at in the market today?
Watching the S&P 500 make very small moves, up about 0.2%, as Charlie was just talking about. That Dow, on the other hand, going to the downside. Tech making a bit of a rebound after yesterday's greater than 1% sell-off, up about 0.6%. Tesla is an interesting one, surging up 17%. I mean, this is the first time we've seen this stock do so well. It always strikes me that people either love Tesla and Elon Musk or seem to hate them, hate the stock and hate him. It's such an odd thing because the story is really not changing, nor is he. It's always an interesting one to me. In any case, it's the best day since 2021, and this, of course, after numbers were better than what folks expected. They're returning to growth, and this, the blowout quarter, essentially upbeat outlook for 2025. In terms of the numbers for the quarter, really was very, very impressive. Using the EE, or the earnings function in the Bloomberg terminal, they beat adjusted earnings by 21%, putting up 72 cents. Sales just a slight miss, but I think it's, that outlook looking ahead, the more affordable EV launch in the first half of 2025, is giving people hope that this company can gain its old luster. And I'm just pulling up a quick chart on it because this one's always, because of these whipsaws, in opinion, on both the CEO and the company itself, it's still in the range. So it has not gotten out of the range. It's gapped higher today. That tells you how surprised people were. It's unclear whether or not the buying pressure will lead this stock up and out of the range. One reason to think that maybe that's going to be more difficult for a lot of stocks from a macro perspective, the S&P 500 itself looks vulnerable to a move back down toward the August lows. There's a near-term uptrend out of the August lows on yesterday's bit of selling, 3 days of selling, right down to it. Today we have, right now up 0.1%, hanging on, trying to hang on. Yeah, looking at this chart, it's not so attractive. So there could be some selling of pressure ahead. Of course, we have the election, the Fed, and more earnings. All those big tech earnings next week.
Lots at play. What's going on with airlines right now?
Airlines. So it's interesting. American Airlines, after having been lower earlier, they put up a good quarter despite rising costs. They've basically given up their old strategy. They have a new strategy, an aggressive strategy. And they boosted their full year outlook. So that stock higher, up 0.8%, but with the rest of the market off of its highs. And then on the other hand, Southwest, there's so many airlines here to thinking about. Last time I looked, and I'm pulling it up right now, down about 3%. They put up a good quarter. They beat profit outlooks, but despite the rising costs, but the outlook for the next quarter shows the pressure of rising costs. So investors are a little bit nervous, maybe also a little bit nervous about the little bit of a battle that they're going through with Elliott. When will that resolve? And speaking of battles, Boeing the deal not coming through.
Yep.
Yeah.
I don't know. I thought 35% was pretty darn.
Yeah, I'd take 35%.
So let us know.
Hey, real quick, IBM, I kind of was of the opinion last 3, 4, 5 quarters, they'd kind of gotten their mojo back a little bit, maybe even getting a little bit of an AI play. The numbers came up a little bit short, I guess.
It's more on the consulting sales side, though, so it's a little bit of a more particular area of their business, but you're not the only person. It's the worst day since April, so I think that folks had been expecting just a little bit more out of IBM, and that this idea that they were turning things around. I mean, I think that there's going to be this ongoing narrative over the next, let's call it, quarter to 4 quarters to a couple of years around AI, where companies can, say that AI is helping them, and then it's not clear. And I think that, within a few years, we'll know the companies that truly benefit from it and the companies that don't. But it was a minor beat on the top line, or excuse me, the bottom line, and a small miss on the top line, and it's just not enough for a stock that is up 33% on the year into today.
Right, all right, very good. Abigail Doolittle, thank you so much for that. We appreciate it. Abigail Doolittle, she covers all the equity markets for Bloomberg Television. Again, another one of the stories, as Ab was just mentioning, and we were talking to George Ferguson about earlier, Bloomberg Intelligence, Boeing not getting the deal done. What's going on there? Because they need